Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Monday, December 15th. We are entering in the third week of December. We have 2 weeks left to end out 2025, and we are going to see how the year ends out, especially for the stock market, which historically, these are the final 2 weeks, and the stock market tends to be better than expected over the past 2 weeks of December. And so we have officially entered it. Santa Claus rally tends to happen around December 26th. These last 9 days going into that Santa Claus rally also tend to not be that bad. We got a lot of macro data this week, including the jobs report that we'll be getting on Wednesday, or actually tomorrow, which will be the first jobs report since the J-Pow cut that we got last Wednesday. And we have CPI this week. We have a couple of other pieces of data like consumer sentiment, inflation expectations, but CPI and the jobs data are going to be the most important things. So we got a lot to talk about this week and a lot of implications of those pieces of data on the actual market itself. Pre-markets, we are green, holding up from the overnight markets that we had yesterday. We did do the future show last night. We were relatively green. We are continuing to be green in the pre-market. 685 up 0.53% right now. Robinhood's up 1%. Google's up 0.5%. Nvidia's up 1.3%. Palantir's up 0.5%. Bitcoin just below that 90,000 level. Ethereum, we got an update on the amount of ETH that Tom Lee bought and BMNR bought over the weekend. ETH right there at 3140. It looks like a relatively strong pre-market. Obviously, we've been hit pretty aggressively over the past couple of weeks, up and down. Even though we recovered, we went back down, recovered, went back down. So I guess we'll see in the next hour how the market opens up and if there is any shot for this to hold its momentum. Again, these are the best 2 weeks of December. So maybe the pain that we had last week based on that Oracle OpenAI headline that we'll recap again is done with, and the market will wake up and says maybe that's not that big of a deal. But ultimately in the next coming days, we're going to see how big of a deal that becomes. Rocket Lab right there up 2.6% on the news that SpaceX is officially planning to go IPO next year. Right now, the tender offer was completed in the secondary markets literally on Sunday, yesterday, $800 billion valuation. So you got SpaceX looking to target that $800 billion valuation. Wall Street Journal has reported that SpaceX has started to already reach out to different investment banks to underwrite the IPO and take it public. And pretty much every single bank in the world would want to be the underwriter because the amount of fees they would make on that IPO would be massive. Also knowing that there's just unlimited demand. I mean, there will be a bidder at whatever price you put up for SpaceX. So Rocket Lab probably seen as a proxy play to that is getting some momentum. Also, they had a successful launch over the weekend, which is very good for Rocket Lab. That's up 2.5% of the pre-markets. S&P 500 again, up 0.53%. We also have a big Robinhood event tomorrow, the Yes No event. It will be an AI/prediction markets event. I will not be there physically, but I'll be streaming it live. So very excited for that. And hopefully Robinhood introduces some really interesting stuff in two markets that are growing really fast for them. Prediction markets growing, basically one of the fastest growing business they've ever had. And maybe they can double down on some of the momentum that they've been seeing on that as well. So we'll be streaming that tomorrow, and we'll keep going from there. Good morning, good morning, good morning. Thank you, everybody, for being here. Hopefully everyone had a good weekend. Got to relax, got to chill. I had a bunch of family events over the weekend, so got to spend some time with family, but we are back. And yeah, I've got 2 weeks left of December. It's kind of crazy. It's kind of crazy. 2 weeks left of this year. This entire year has felt like it's flown by, but also this entire year has been pretty crazy with a variety of different catalysts that we've had. But that's it. 2 weeks left, and then we are done for the year. I did officially announce the date of the New York City meetup, which is going to be February 1st. Again, I'll put the link right here in the chat for those that want to check it out. For those that got to see the manager stream over Friday, hopefully that was a fun one. And we got a lot of people that already signed up for the meetup. A bunch of people RSVP'd. Again, that's the link in the chat. And if anyone wants more details, you can email jess@akcoms.com with any questions, and you should be able to get an answer pretty soon. But yeah, very excited to take the next step in the business, hire some people, and really expand this and take things forward. And we'll get started with the next meetup after the New York City meetup, which looks like it's going to be Los Angeles. So lots and lots of planning to do, but very excited to be here and get all this started. Tom Lee was live today. Here's his thoughts on 2026. Now we're getting a bunch of other analysts come out and give their predictions as well. including Citi and JP Morgan. So we'll take a look at their price targets. Most of them are ranging from 7,500 to 7,800. Here is what Mr. Tom Lee had to say this morning on what he's expecting for 2026.
Related, but not related.
Yeah.
You know, I think the AI trade, I mean, it's been a juggernaut, and we know that the visibility for the next few years is really good. But now investors are just trying to figure out how much to discount, you know, what's the appropriate price to put. And that could drive some profit taking because they've done so well this year. On the crypto side, I think that there has been some concerns about, you know, quantum. And then there was that huge deleveraging event on October 10th. But the crypto fundamental story, I mean, is exiting on a really high note this year. You know, the US government passed legislation and regulations favorable for crypto. And we know Wall Street has expressed a lot of interest in building products on the blockchain. So it's almost like they both have great visibility, but the price levels are just what's being uncertain.
I feel like what's common, though, with both of these stories, though, Tom, is investors questioning the growth, the trajectory of growth going forward for both of these stories. Not to say that things will contract, but maybe growth won't be as strong as we've seen. We've hit the peak sort of growth rates in terms of the story. The maximum bullishness happened with Bitcoin when the administration came on board and things started to sort of go Bitcoin's way. Maybe that was peak sort of trajectory higher when it comes to growth. Same thing with AI. Now it's a period where you're sort of wondering, will this actually get funded after we saw this massive expansion?
Yeah. Well, in crypto, the best years are definitely ahead because today there's only 4 million Bitcoin wallets with $10,000 in it. There's 900 million IRA and brokerage accounts globally that have $10,000. So that's 200 times larger market. With regard to AI, I do think that the business models need to evolve. You know, you can't just charge $20 a month. I mean, really AI agentic services, but the market ends up being huge because in the US, it's really making 130 million existing workers into super workers. I mean, that's a several $1 trillion market just in the US alone. So I think there's still opportunities.
When do you think that we're going to see the tipping point on that front? And I think arguably you're seeing it a little bit maybe on the margins right now. But do you see a step change 18 months out from now? Is that 5 years out from now? It's because there's also questions, by the way, about some of these services and how valuable they are to people right now. And I know some CTOs and others who are actually saying, you know, we're actually not getting the value out of some of these products that we were hoping to.
Yeah, I think we're in what I'd call the bleeding edge phase, like where everything feels like the tech is in front of the applications. That happened in mobile, which I studied for 17 years, and in internet early days. You know, like when color phones first came out on mobile, or even keyboards, people kind of sneered and said, you know, who's going to be using a color screen? And remember famously what happened when the iPhone was launched and how one of the biggest competitors dismissed it and saying it's just a toy.
Right.
I think we're at that phase with AI where the capabilities will blossom and then services will follow. But that, as you know, the future happens faster than many expect.
So if the business models of these players, which people commonly call the Mag 7 in general, need to change, then what does that do to the valuation? Are we rethinking the valuation? Because, I mean, one distinct change has definitely already happened, and that is asset light to asset heavy, asset spending on assets continues, et cetera. Is that reflected already, or does there need to be further adjustment?
I believe that AI stocks, especially stocks like NVIDIA, are going to actually re-rate higher. Because if Walmart and Costco trade at 37 to 45 times earnings because they're predictable, then NVIDIA shouldn't be 27 times. I also think the banks are really criminally undervalued right now, like a JP Morgan, because that's becoming a technology company. And in the past, people are stuck in the head that it should trade at 1 times book or 10 times earnings. I mean, they should trade more like a tech stock. So I think tech and financials.
Do you think that of all the banks? Or I mean, JP Morgan in particular is invested obviously heavily in tech. But if I said JP Morgan and then I mentioned a bank 10 rungs down, would you say the same thing?
Well, it depends on how sort of evangelized a bank is towards adopting AI and being tech forward.
So, okay, on this screen right here, like is Wells Fargo on your list of tech forward banks?
Possibly. Goldman certainly is. And I
Okay.
think Morgan Stanley has shown a lot of evidence. So I think banks are sort of getting it, but they are really becoming technology companies,
So even at record highs,
even at
you like
record
these
highs.
banks.
You know, as many technical strategists will tell you, it's actually sometimes better to buy things at all-time highs.
All right. So you got Tom Lee right there, relatively bullish for 2026 and the progress we're going to be seeing. We'll go through some of the other Wall Street sell-side analysts and their thoughts on 2026. By the way, Tesla, what a move pre-markets. I think this happened literally in the past 3 minutes. 469. That's a 52-week high for Tesla, if I'm not wrong. I know it doesn't necessarily count yet because we're not with the market open. I don't think there's a headline that's causing this outside of the, we talked about this last night, but there were unsupervised robotaxis on the streets of Austin, Texas, which was awesome to see. So you officially had Tesla cars that were running without a driver in the car. So that was bullish. And I guess the street, 488 is the all-time high, correct? I guess the street is starting to price that in as like more exponential progress on the robotaxi ramp up. Seems like that could be the reason for that. That's a pretty big move. Yeah, Wedbush had reiterated their buy on Tesla. The price targets have been relatively bullish over the past couple of weeks on Tesla. It didn't break 470 yet, but it looks like it wants to. Let's see. We got about 30 minutes. Let's see if it can hold this into the market open and it busts through. 488 is that all-time high. Ironically, last time we touched 488 was around this time. We go back a year. 488 in 2024. Yeah, December 17th. 2 days from now in 2024 is when you hit all-time highs. So we are right a year later and a dip all the way down to 214 where there you go, 470. We're right back, not literally at those levels, but close to those levels. 470.22 on Tessie. That's up 2.4%. All right, this will be a big one when the market opens. Hopefully Tesla can maintain some of that momentum and maybe break through back to those all-time highs. Ethereum. So you had two pretty big bullish updates on ETH. First of all, Tom Lee bought a ton more ETH. They now have 3.97 million Ethereum, 3.2% of the entire ETH supply. And they bought a significant amount last week of ETH. MicroStrategy, by the way, bought another 10,000 Bitcoin this morning. So we'll talk about that in a second. But they now have 13.2 billion in cash, and they're the 41st most traded stock in the US in terms of Bitmine. 3.2% of the entire ETH supply. And then you had this piece of news this morning, which was pretty massive for Ethereum. You know, they might not reflect in the price, but long-term, this is part of the bullish thesis. JP Morgan is getting into crypto with tokenized money. The banking giant's $4 trillion asset management arm is rolling out its first tokenized money fund on the Ethereum blockchain. JP Morgan will seed the fund with $100 million of its own capital and then open it to outside investors on Tuesday, as per the Wall Street Journal. So they're launching tokenized money funds on none other than Ethereum, which is very, very exciting. Now, again, the entire thesis on Ethereum is that you're going to have a lot more of the traditional financial institutions merging with blockchains, and that blockchain of choice will likely be Ethereum. Some of it will be Solana. Some of it will be potentially Bitcoin, even though it's not as likely for it to be Bitcoin. Bitcoin more of the store of value, but ETH seems to be the core winner in this race. And that's why Tom Lee continues to buy. 31.33 on ETH, 0.55. That's up 0.3%. Tesla right there, still at 469. SoFi up a little bit. That's up 1%, 27.48. And then you got the S&P up about 0.5%. Do we have an NVIDIA headline? NVIDIA, are we moving up or down? Up, NVIDIA, that's a bigger move than expected. Almost 2%. And I agree with Tom. NVIDIA trading at these levels still does not make a ton of sense to me. Let's see. We got a couple analysts sort of reiterations of outperformance on NVIDIA. Let me see if there's anything else specific. NVIDIA, let's pull this up. NVIDIA launches the Nemotron 3 family of open models. Okay. There you go. That's what's causing this right here. Designed for efficient, high-accuracy, multi-agent AI applications, Nemotron 3 Nano delivers 4x higher throughput than Nemotron 2. NVIDIA also released open datasets, RL libraries, and tools for specialized AI agent development. Nemotron 3 Nano is available now. Super and Ultra expected in H1 2026. I think this has to do with their internal libraries of models that they offer to customers inside of their software stack. And so, yeah, I don't think it's the biggest headline in the world, but it is a new product update along with a variety of other product updates they launched a couple weeks ago. So NVIDIA right there, 1.49% pre-market's 177.65 as we turn green right here. I mean, look, the question of this week is going to be, will the OpenAI Oracle headline, which for those that missed it, the headline was a delay of a data center that Oracle refuted. But nonetheless, the market went crazy when that news came out on Friday. We were down 1.5% on the S&P. That was enough to, I mean, take NVIDIA down, take HUD down, S&P. I mean, everything just got hit once that headline came out. And you had a lot of the market just afraid that the data center build out is not happening, which again is kind of ridiculous. And you know, the reason it's ridiculous is because let's assume the worst case scenario, there was a delay in a data center, which like it's not even the worst case because inevitably there's going to be delays for data centers. Like these are very, very hard things to put up and get running. So yeah, of course there's going to be delays back and forth. But then you had this news from Google right here this morning, which is that Google is going to sign a deal in Malaysia to buy power from a 30 megawatt solar farm starting in 2027, supporting its data center energy use and Malaysia's goal for 70% of installed capacity from renewables by 2050. So like, yes, maybe OpenAI and Oracle had a delayed data center, which is inevitable given how like complex challenge it is to build these data centers. But the overall demand for data centers, given that this OpenAI Oracle thing was probably a supply thing, not a demand problem, is increasing. And you've got Google going across the entire world, finding out how they can buy more energy. You do have that summit coming up with Jensen Huang soon about the power shortages. I think that's next week, or might be early January, but that is going to be a summit where he talks specifically about how to deal with the power shortages. He's probably going to mention a lot of energy companies in that summit that can help us deal with that problem. That doesn't seem bearish. That doesn't seem bearish for data centers at all, or the broader energy ecosystem. If anything, it's very bullish for demand across the entire supply chain. So yeah, that headline, which it is what it is. I mean, I bought the dip. I think a lot of people bought the dip on that headline. We're going to see if that headline actually has any weight to it, or if that headline continues to create some momentum to the downside. Now, Broadcom's earnings in terms of their earnings call wasn't necessarily the best. Broadcom right there flat in the pre-market. So Broadcom going down and then Oracle going down. I think that compounded. It gave you a 1-2 punch along with the fact that it was Friday. You have options expiring. You put all that together. Yeah, you get a crappy Friday. But this is a new week as we head into the end of December, and you know, maybe we recover from a lot of those levels. We do have Nike earnings this week. That is correct. Nike, Micron, and FedEx. Was the Oracle news real or fake? Oracle came out and said it was fake. Oracle came out and said all of our timelines are on track. Nothing has changed. And if there's any shortages, it will be because of labor and material, not because of demand. The market assumed it was more of a demand thing because the market is on tilt on any of these AI headlines. So maybe it's real that there is some delay. It's just that delay is not likely rooted in a demand issue, which is why we shouldn't see most of that pain. Not to mention the Trump administration that is eagerly supporting the data center build out at scale because they know that 50% of our GDP this year, and really since 2022, has been CapEx. So they want this investment as well. It's like you're fighting the Fed with lower rates, and then you're fighting the Trump administration that's incentivizing you to build as much as possible, potentially even with a new R&D tax break that Trump is thinking of bringing out to corporations. Doesn't seem like the irrational moves of the market on these headlines are realistic when you look at those broader two macro trends, which is why I think the data center story continues to be pretty bullish. Roomba, this stock has gone down 71%. So we talked about this last week. A couple of you guys in the chat said, hey, I have this. What do you think I should do? I had no idea why it pumped from 1 to 5. But unfortunately, they have officially filed for Chapter 11 bankruptcy. And that's why it's pumped down from, or dumped down from 5 to 1. So realistically, yes, last week that was a trade. It was not an investment to hold on to. And I mean, obviously the price action kind of signaled, in my opinion, it would end up being a trade because like, why was it pumping in the first place? But the sad part about this is that this company could have got acquired. This company could have been acquired. Elizabeth Warren back in 2022 led an effort to stop Amazon from buying them out, which would have kept the company in business, created more jobs, helped the economy. Elizabeth Warren in particular asked the FTC, and then Lina Khan got involved and didn't let it happen. And this was back in September of 2022. And then you had Roomba file for bankruptcy. So you're not going to see that happen that often in the Trump administration. We just have a fundamentally different paradigmatic approach to how we think of business here. And that, unfortunately, that's why, you know, the stock is down 70% right here in the pre-market. But that's what you have for Roomba as they are now engaging in Chapter 11. Okay, so let me pull up this right here as well. This was the NVIDIA upgrade, or not upgrade, but outperformance by Bernstein as they continue to be pretty damn bullish. Then we'll talk about Citigroup. NVIDIA, so Bernstein said after meeting with NVIDIA IR, which is their investor relations, NVIDIA is still waiting on formal U.S. licenses to ship H200s to China. That was the big headline last week, and hasn't received codified terms on the 25% government revenue share. Management says it's about 2 years ahead of Google's TPU program and sees GPUs as a better fit for the AI cloud. So again, NVIDIA reaffirming the fact that they're going to be able to sell into China and that TPUs should not be necessarily hurting their business in any meaningful way. And on top of that, Bernstein said, hey, we still believe that their $500 billion target that doesn't include any of the China revenue is relatively strong. And as a result, while acknowledging the TPU progress, NVIDIA views its hardware as a better suited for rapidly evolving AI models and cloud infrastructure, which is why we continue to be bullish on the name. NVIDIA now trading at below 25 times fiscal year 2027 earnings, which is their next year earnings, making the market think, hey, it might be more cheaper than not. SEC is hosting a crypto task force later today. That should be relatively bullish for crypto potentially. SEC Gov Crypto Task Force hosting a roundtable of financial service and privacy featuring 2 panels of industry participants. They had one with the Coinbase CEO a couple weeks ago. It looks like they are having even more of these. Again, these are the macro trends I don't think you want to fade. You don't want to fade the crypto trend. You don't want to fade the Fed easing, and you don't want to fade the AI trade. This administration, by the way, for everyone calling for regulations on the prediction markets, Trump Media is launching their own prediction markets. So there's a lot of people saying, oh, the prediction markets are going to be banned because they're going to be treated as sports books, and those are illegal in many states. A, I think there's a fundamental difference between prediction markets and sport books, but B, the Trump administration through DJT is getting into prediction markets. They're going to be called truth predictions. So you can bet on different types of truths. So yeah, they're not going to regulate these. Like it's the wild, wild west, and you either have to adapt or fight it emotionally, but it is happening. And so I don't think we're going to get that type of massive regulation at scale. So that's what you have on the NVIDIA update from Bernstein. What's his name? Saylor did buy 10,000 Bitcoin. I don't know how he keeps getting the money for this. I thought he was done with the money for this, but he continues to find a way. He bought exactly 10,645 at 92,000 a coin. I mean, he is continuing to buy this dip and refute this 4-year cycle argument. If it is a 4-year cycle, Bitcoin's going a lot lower. If it's not, I think Tom said we got to get back above 130 by January to kind of disarm the 4-year cycle thesis. Then maybe these buys are going to end up being good buys. 671,268 Bitcoin. Average price is 74,972. Bitcoin, again, has been kind of stable around 85 to 90 over the past couple of weeks. But Mr. Michael Saylor continues to buy more Bitcoin. Yeah, this is yes, that is correct. There's a couple of other bigger, what do you call them? Treasury companies that have also acquired some more Bitcoin over the past couple of weeks as well. They're just not acquiring at the scale that he is. I mean, some of these treasury companies, the most they have is 4,000 or 5,000 Bitcoin on the balance sheet. Sailor's buying 10,000 at a time. So it's just a fundamentally different view on the amount of Bitcoin and the velocity at which they're able to essentially acquire them at scale. Citigroup, here's their target: 2026 S&P 500 7,700. They're assuming 320 of EPS on a 24x multiple. Their base case assumes 2 Fed cuts, which is different what the Fed said. The Fed said you're only getting a 1 cut, and the 10-year drifting to 3.75. Right now, the 10-year still around that 4.15 level. AI is their core theme. Their argument is that AI will be helping. Leadership could be shifting to cyclicals, small caps, utilities, but AI should be the core argument for where we get S&P multiple expansion at $310 of earnings per share in 2026, 320 on the upside, 24x multiple. That's how you get 7,700. Pretty much every analyst, JP Morgan also came out with 7,500. I think you had Oppenheimer the most bullish at 8,000. I mean, you got a lot of analysts that are not necessarily drifting from Main Street consensus, and they're kind of doubling down or on this like 10% gain, which would be 50% less than what we've seen over the past 2 years, given we've been averaging 20%. But it's also reasonable given it's the 4th year of a bull market. You probably are going to have some of those gains consolidate. The question is how we get there. And I think that's also a deeper question. Like, how do we get to 7,700? Is it through a violent downturn and then upswing? Is it through like kind of a flat move higher? I think you would have to bet it's going to be a volatile move up or down to get there, because this administration uniquely has been volatile. Also, do we have a shutdown? Kalshi is pricing it at a 40% chance, which is not insignificant, which I just don't think we can afford having another shutdown. It already took off a couple percentage points of GDP. So that is going to definitely be something that we have to look at as we get into January. And hopefully it's not as bad as what some people might be thinking. When does the Santa rally start? Again, so technically that Santa rally is September 26th, or not September, December 26th. I think today is going to be really important if we can hold some particular levels, especially on the S&P. We're at 685 right now. I think we at least got to hold 685. We don't got to get to 690, but we can't drift away back to the low 680s. And if we close below Friday's close, so below 681, that is not going to be bullish. Which is, it's nice seeing that pre-market move higher right here, but we really do have to make sure that we can hold above those levels to keep things going. Yeah, Grab also has their meeting today with GoTo, so that's going to be happening on the 17th, so in a couple days, and we'll see if that has any implications on Grab. Again, we looked at that report from Friday. Alex Hungate, the COO, was at a conference, and he talked about Q4. Q4 demand looks to be off the chart. It likely is going to be their highest quarter ever in terms of tourism. The fact, they're paying drivers extra just because they don't have enough supply to be able to handle all the demand that they're having. So Q4 should be fine. The question now is, do they get to acquire GoTo? And I think we'll get a lot more clarity towards the end of this week. And that'll also determine if this one makes a move. Yes, the BOJ will be cutting or hiking rates, I should say, on Friday. I think that's priced in. I think the market knows when this happened a long time ago, the market didn't even know they were going to be hiking back in October of 2024 or August, which is what caused that yen carry trade. Now the market knows. So I know it's kind of weird. They're printing money and they're hiking, and I've been trying to do research on why that's happening. And they're trying to kind of manage a variety of different issues that are happening with the economy at the same time. One could argue it's not going to work, but I mean, this is how their bank is thinking of it. But it is counterintuitive for them to be hiking and then printing at the same time. But I think it's a little bit priced up. By the way, you got your boy Burry, who seems to be getting ready to pump GameStop. Will drop my GameStop post Sunday late evening. And then he said, my apologies, there's too much info to organize, cannot make the Sunday deadline. So this guy is saying NVIDIA is a scam, and he's getting ready to make a big post about GameStop. Does that kind of like... Does that kind of make people think twice about what the hell is going on? NVIDIA is a scam, short the most important company in technology. But hey, I've got a massive post coming on GameStop, which, by the way, Burry's not really bullish on Bitcoin. GameStop, guess what they did last year when they raised all that money? They bought some Bitcoin. And the rumors are Ryan Cohen had a 1-hour meeting with Michael Saylor, and the next day he was convinced to buy Bitcoin. Like, that's the guy you're going to trust over Jensen? Really? Like, yeah, it's big. It's like, are you trolling? Like, I mean, if anyone needed a reason to not take him seriously, I'm not saying GameStop can't be a good stock. I'm just saying you're saying short the world's most important company and then buy GameStop, which doesn't even take questions in their earnings calls because they don't want to answer to shareholders. It feels like a joke. Feels like a relative joke. Here's a chart from Bank of America that I thought was pretty interesting. Hyperscalers are spending 60% of their operating cash flow on data centers and other CapEx flows. This is below, far below, the 140% peak by telecom companies back in 2001. So although there are many, many concerns of comparing this to the dot-com bubble, again, we're just looking at the data. We're not using emotions here. Like there is no need to bring in emotions to try to make the argument to justify this technology revolution that we're seeing. In 2001, the result of operating cash flow as a percentage of the business was 140%. It was 1.4x over levered. Right now, it's 60%. Now, we have more debt being introduced into the system, which is why the market's getting a bit scared. But we are nowhere near the telecom build out, which, by the way, a lot of that dark fiber ended up not being used. Every GPU that people can get their hands on is being used. It's just, again, two different fundamental narratives that are at odds with each other when you try to say that you can easily compare them. You can't easily compare them. They're not the same. The percentage of cash flows as a result of CapEx build out doesn't even kind of match up. Which again makes the argument for why the CapEx spend is not necessarily bearish. But long term, we're gonna have to see how the market ultimately interprets it. Walter Isaacson, this is the Elon Musk. Let's get his thoughts on a couple things going on, especially in the context of SpaceX. And we'll listen to what he had to say earlier this morning on that company officially going public.
I think going public, he probably slightly reluctant, although you need to if you're going to make the biggest space. It is sending more than 95% of all of Earth's payload to orbit comes from SpaceX. The rest is China, NASA, Russia, Europe, whatever. So he's making it huge. And what's truly huge is things like Starlink, which is recreating the internet in outer space. So he, I guess, needs to go public. He's not somebody, he kind of chafes at the restrictions that come along when you go public, as we saw with Tesla and other things. But I just think this is a company that's really going to go huge, SpaceX. Yeah.
Okay, who's buying the SpaceX IPO? Put in the chat. Let's do a poll on this. Who's buying this SpaceX IPO? Rumored at 800 billion. Probably going to be hard to get it at 800 billion. Most likely going to be upwards of at least 900, if not $1 trillion. Are you buying the SpaceX IPO? Are there some people that are just buying it at whatever price it comes out at? Because I've heard that on Twitter all weekend. And I'm like, okay, that's fine. Do think there's a cheaper way to play it. It's called a lab of rockets. But obviously, if you can get in through an SPV or something at a cheaper price, then maybe that's easier to. But if you get in through an SPV, you might have a holding period. You might have a lockup, right? So if you get in like right now at a discounted price, you might have to hold it for 6 months. And I don't know how many people want to hold it for 6 months, knowing that it could pump real high and then just get dumped easily if people don't have the stomach to hold on to it. 50-50. 52% of people say no, 40% of people say yes. 50-50 right here. I mean, obviously, if you're heavy in Rock Lab or ASTS right now, I really don't think you need to. But I think if you have no space exposure, that's what gets people excited. Also, people just love SpaceX as a company, which is fair. It's a phenomenal company. But it's definitely going to be a hefty valuation that it comes out at. Also, again, remember, this is the market dynamic for those types of IPOs. You could not have done this in 2022, right? You need a market dynamic where there's excitement, there's energy, there's lower rates. Like, you can't do an IPO of this magnitude and expect it to be successful if you don't have a raging bull market that's supporting it. So I think Elon knows this. I think that's why he's going to have to do it pretty quick if he wants to get this IPO to happen. And, that's why they're selling this data center and space narrative that is now started to propagate a lot of the mainstream understanding of what a data center could look like 10 years from now, which SpaceX might be well positioned to capture. Tesla right there, 469 in the pre-market, still up 2%. Again, no headline on Tesla outside of those robotaxis that we're seeing in Austin. So maybe that is enough to carry it through. S&P is making its move in the pre-market. Got about 9 minutes to see if we can hold on to this excitement or if we end up going red when the market opens. Let's do a green or red poll as well. Yeah, 50. It's about 60-40 yes or no on the SpaceX with the nose leading right here. Green or red today? What do we think? Green or red? Don't use the R word. The R word is red. You know, the R word, which was recession, J-Pow was supposed to say, he didn't end up saying it during the FOMC. Triple V, thank you for being here. Thank you for the $200 super chat. Appreciate you being here. And thank you again for the super chat. As we get into this market open, we got about 8 minutes to see how this market's going to play out. And again, I think a lot of us got whipsawed on Friday. We knew Broadcom earnings were like not the best and that it would struggle a bit. I didn't expect it to go down almost 15%, but that's what happened. So maybe we get a rebound today. Oracle followed through. If that news is now not as ugly as it was on Friday, then maybe we get that rebound. Deez, thank you for the $5 super chat. Good morning. Appreciate you. How about Redwire as a space play? So I have not done enough due diligence on Redwire, but yes, this is one of the core names in that bucket of space stocks that could obviously catch a bid. And I think it caught a bid last week. It's up 3% of the pre-market. I just think with a lot of these, you have to be very, very sort of like convicted on their moat. And then you have the space narrative that's going to be helping it. And to me, the two names that obviously stand out are Rocket Lab and ASTS. And yes, are they expensive? Probably more expensive than Redwire, sure. But they have legitimate moats, and they actually have investors that deeply care and hold those stocks and have been holding those stocks for years. So I think Redwire could be a play. I just think Rocket Lab and ASTS are really easy to latch onto. Rocket Lab up about 2% in the pre-markets as well. Oh yeah, we saw this headline this morning. Amazon Leo and ASTS are pairing with Starlink, are going up against Starlink as Amazon's space satellite program potentially working with ASTS over Starlink. Obviously, Amazon has their own competitor to Starlink, which is Blue Origin, or their own rocket competitor right here. SpaceX currently has 9,000 Starlink. This is in orbit and growing. Amazon Leo is 150. American Airlines this morning is thinking about going with Amazon Leo over Starlink, which would be better for their customers and put them in a position to better compete. Sawyer Merritt right here says American Airlines will lose business to their rivals in the years if they don't choose Starlink. So American Airlines in talks with Amazon for Leo in-flight Wi-Fi. I mean, look, United is working with Starlink, and United's Wi-Fi has gotten significantly better over the past couple flights that I've had. I don't know what Amazon Leo satellites would look like when it comes to delivering internet in American Airlines, but there is an argument that if it's not that much better, then people might just choose to leave that airline and go to other competitors. But we're going to have to see if that ends up playing out. Yeah, Amazon doesn't own Blue Origin. Jeff Bezos does. But obviously, if Jeff Bezos owns Blue Origin, there's potentially some contracts that Amazon could be getting in correlation with Blue Origin because of the Jeff Bezos connection. Which, by the way, Jeff Bezos bought an AI company last week. It went under the radar, but he bought it for a couple $100 million. So that new startup that he's working on, it's like some agentic startup. It's worth $6.2 billion. Yeah, it's not like Bezos is slowing down in terms of his AI ambitions either. Amazon, though, I mean, regardless of if you think Starlink is going to compete massively with Amazon Leo, I still think Amazon is discounted aggressively. It's up 2% this year, has barely done anything. And AWS is growing, lowest EBITDA. Margins are going higher. Even if slightly, margins are going up. And growth has reaccelerated. Feels relatively cheap going into 2026. Also, we don't talk about their Trainium chips enough. It's not like going to eat NVIDIA's lunch, but them and Google are the only ones that are actually training and building their own proprietary chips outside of NVIDIA. I know Microsoft and Meta have been rumored to do it, but realistically, it's Amazon and Google. And Amazon actually has customers like Anthropic for those chips. So it would not seem crazy to me for that to be your full-on diversified thesis going into next year. Trainium isn't even priced into Amazon. Yeah, I agree. Yes, NVIDIA did drop new open models. And I don't know if that's that big of a deal for NVIDIA. The market kind of likes it up 1.4%. I don't know if it's going to be moving the needle in any meaningful way, but that was a headline this morning, which got NVIDIA to get a little bit of love. All right, 3 minutes until this market opens. Again, thank you everybody for being here. 78% of you say green over red. The next 3 minutes, we are going to see how green or red we go. I don't know. Again, these are the last 2 weeks of the year where we see more excitement. If you look at historically, this is S&P 500 since 1950 during December. Last 2 weeks of December, starting now, is when we make a move. I just wonder how much juice do we have left in us to make that? I think all of us know that the market feels exhausted of this AI trade. And like, I get it. You know, you got multi-trillion-dollar companies. Google's up 70% this year. Like, it makes sense to be exhausted. But do we have one more end-of-year run left in us? VIX is down today, which is good. VIX was spiking on Friday. There's definitely going to be tax loss selling. That'll probably be part of it. But I think the other thing is there's going to be a lot of people that have gains in these the main stocks that are composing the S&P 500, Broadcom, AMD, NVIDIA, et cetera. They're not going to want to sell those. If anything, they're going to wait till January 1st because they do not want the tax implication going into 2025. So, I mean, I think a lot of the carriers of the market are not necessarily going to get sold off, even if you have big gains on them. You're just going to try to inch it out and wait until January. But the question is, do other buyers come in? Also, Tesla. I am very curious to see if Tesla can hold this. I wonder if this is a fake pump on Tesla or if this is, no, the market's getting really excited about seeing robotaxis. NVIDIA right there, 178, actually on the road in Austin. Even Broadcom going green right here. We got about a minute until the market opens. Look at that, Broadcom. Look at that candle. It was at 358, flipped up to 361. Tesla as well, 469. Let's see if these can hold and if we can end up getting a start to some potential green for the last 2 weeks of December. All right, folks, here we go. It is Monday, December 15th. We had a bunch of different Oracle OpenAI headlines happen throughout of last week. Same thing with Broadcom. A lot of that compounded on Friday, caused the market to get hit. A lot of those headlines, when you really look under the hood, aren't that relevant. So today we're going to see if the market can make its turnaround. Monday, December 15th. Thank you, everybody, for being here. 9:30 a.m. Monday morning. The stock market is now open. All right, wake your ass up. Let's get into it. S&P opens up 0.54% on the day. There you go, 685.25. Holding that 685 level is going to be really important. Really, really important throughout the day. That is green. NVIDIA opens up 1.25%. Amazon opens up 0.5%. Tesla, 473, 474. Market likes it. We have not seen these levels since December of 2024. December 17th, to be exact, is when we hit 488.54, which was the all-time high. 474.38. That's up 3.3% on the S&P. Robinhood goes green. Snapchat goes green. Google at 309. That goes green. All the Chinese stocks are red because the retail sales in China were worse than expected last night. Not by a wide margin, but they did miss expectations. So that's why I think the Chinese stocks are red. But they are holding up based on their performance from last week. UNH goes green. JP Morgan goes green. Goldman Sachs goes green. Apple goes green. Eli Lilly goes green. Oklo's up 1% on the day. AMD is at 212. That's up. Oracle goes red again. Wow. Market is still not happy with Oracle. You would think this gets a little bit of a rebound. No. Oracle once again goes red. Oracle is now below where it was on Friday. It's there you go. Meaningfully violating those Friday lows. 185.04 right here on Oracle. That's down about 2%. How about Broadcom then? Broadcom is very close to going red. It's basically flat right there. 360, 359.95. There you go. Broadcom going red. So Broadcom and Oracle not being able to catch the bid. S&P still holding 658. Tesla, are we still holding 475? Wow, 475. Tesla going the opposite of Broadcom and Oracle. Got a little bit of a market rotation happening there. AMD still holding 213. IREN also going down. I bet that means Nebius is down. Nebius is also down. CoreWeave is probably down as well. Oracle is like the core data center play, at least in the eyes of the market. CoreWeave actually slightly green. So Nebius and IREN getting hit as proxies to that data center ecosystem. Celsius, that's up 3%. Celsius getting some love. NVIDIA still holding 1.5, which is super bullish for NVIDIA. Amazon goes red at 226. Broadcom continues to go red at 358. IREN now below 40. And Tesla, my goodness, 18-point move, 477 on the day. Palantir as well, not slowing down. 187 on Palantir. 2%, almost trying to make its way back up to that 190 level. SoFi as well, that's up 0.65. Robinhood trying to get down here to 120 or up to 120. Ethereum at 3,100, but Tesla is really the story of the day. 476 on Tesla. All-time high is 488. That is correct for Tesla. Rocket Lab should be ripping as well. Rocket Lab is indeed ripping. 63.30. It hit 64 for a second. That's up 4%. Is 2026 going to be Elon's year? Is 2026 going to be Elon's year with Tesla and SpaceX? His net worth would balloon to about $675 billion if SpaceX were to go public at around that $800 billion market cap. I mean, he's got $1 trillion pay package from Tesla. Maybe the robotaxis start scaling aggressively next year, even though he said they're not going to be like scaling aggressively in 2026. But if you get a little bit of a hint of that, the market would be excited. Even PayPal goes green. Wow. So PayPal's green, Rocket Lab's green, Palantir's green, Tesla's green. Broadcom down 1%. NVIDIA's also green. Nebius down, IREN down. Amazon 224. Maybe that's because of the SpaceX IPO and people are bearish for Amazon satellite arguments or endeavors. Rivian goes green, and then Oracle goes red. So Oracle and Broadcom kind of leading the way on red. Bloom Energy goes red again as well. A lot of those energy names. EOSC continuing to go red. Ondas Drone Company, that's red. Carnival Cruise, they have earnings this week. Netflix goes red, 94.77. Where's Warner Brothers? Are we close to 30? We were at 29.84, so close to 30. Celestica's down a little bit. Fermi's down 6%. They lost a big data center customer on Friday. That's why they got hit 40%. AppLovin's at 680. Duolingo just below 200. And then Adobe goes red as well. How about Uber? Uber's red. That fell 3%. Up S&P, there's your red candle. It's not red yet on the day, but it did get your red candle right here. IREN below. I don't know why IREN's getting hit this bad. I mean, I guess you could tie it to Oracle and the data center trade, but this seems uniquely like it's affecting IREN. Even Nebius is not getting hit that bad, right? Yeah, Nebius is down. It's not down. IREN's almost 4%. Nebius is 2.5. Uber 2.7, Rocket Lab still holding on, Palantir 187, NVIDIA 177, and then Tessie at 477. What happened to Google? What did happen to Google? Oh, Google goes red. Okay, so this is kind of what happened on Friday. You had a bunch of different stocks start to show some of the red candles before the market ended up turning red. Maybe there's a world where that doesn't happen today, given you have some leaders. It feels a little bit more like rotation today versus a signaling of everything going red. But then again, you know, that's kind of what happened on Friday before things went red. NVIDIA is still holding on to its green. CoreWeave just went red after being green. Tesla just hit 478. It's almost like a lot of money is just leaving everything else to pile into Tesla more than anything. But we're going to have to see if the S&P can hold up. I mean, the only thing holding up the S&P right now is Tesla and NVIDIA, to be honest, and Palantir. Because the other Mag 7s are getting hit. Where's Microsoft? Microsoft is red as well, 477. Yeah, first few minutes of open tend to be choppy in general. Hard to develop a trend from any of this. Also, last week, I mean, we did have a really nasty headline that just ruined everything, which was that OpenAI Oracle data center thing. Absent that headline, not sure if we're going to have to see that type of pain. Tesla 478. Let me check resistance for 479 on Tessie. I mean, you got to be pretty happy as a Tesla shareholder. You're seeing some of the market price in physical embodied AI that can generate revenue immediately, even if it's not scaling like a Waymo yet, over the data center trade, which is going to take time to monetize. And maybe that is part of your rotation right here. 479 resistance on Tesla is, oh, we already hit 479. Let me go to 480. We just hit 479, like for a millisecond. 479.20 we touched. 480 is about 183,000 shares. 183,000 shares waiting at 480. Google just went green. Still have a red candle, but Google just went green. Microsoft also just went green. That's very encouraging to see that break trend. Palantir still holding on to 187. Hoodie holding on to 119. Again, Hood has a big event tomorrow. So for those that are trading Hood, I do think that event could be market moving. So that's one that you want to watch out for. Goldman Sachs hits an all-time high at 900. Financials continue to do great. JP Morgan, is that basically at all-time highs? Yeah, JP Morgan basically at all-time highs, along with Goldman Sachs and UNH at 342 as well. Broadcom, wow. What is the street so upset? Okay, well, I was talking about this last night. Like, it was a good quarter, but when you look at the earnings, it either makes NVIDIA look stupidly cheap when you compare them to Broadcom and the multiple, or it makes Broadcom look stupidly overvalued when you compare it to NVIDIA. So maybe this is literally just the case of the multiple is not reasonable enough for a company at a $2 trillion market cap to sustain these levels. And then people say, well, Tesla's multiple is crazy. Well, yeah, but Tesla's different than Broadcom. Tesla has a whole different story that, you know, they can sell to investors. But it maybe really it's just a Broadcom. Wow, Broadcom 353. This is this thing going below 350. My goodness, 2% down on the day. Google just went red again. Microsoft went red. Tesla touched 480. There you go, 480.6. She touched it for a second, then it got hit, but 480 was achieved for Tesla. Meta, we didn't look at Meta today. Are we green? Meta's green, 644. Meta is green. Okay, so Meta and Tesla, two of the only Max 7s that are green today. Is Apple green? Apple's red. Amazon's red. Google, Microsoft are also red. NVIDIA is the other one that's holding a little bit of its candle. Not as much as it held in the pre-market, but still 176.47. And for anyone who's wondering why is Tesla making this move, I realistically think it was the leaked videos over the weekend of robo-taxis with no driver inside of them. That's it. It seems to be like that was the reason. 481 resistance for Tesla is 14,000 shares. Just not that crazy, given it busted through 480. But it would have to continue to get there. Yeah, it wasn't even leaked, to be honest. Someone just like recorded it. So once that went viral, I think a lot of people got excited for that. I ran well below 40 here now, down 4%. Not sure why that one's getting hit as bad. Nebius down 2.5. Tesla still 478. Meta 646. Tesla, Meta, NVIDIA. Those are your green names holding up the market. Amazon continues to decline. Apple continues to decline. Microsoft continues to decline. Google continues to decline. CoreWeave now catching up with Nebius down about 2.8%. Snapchat's up a little bit. Robinhood just went red. SoFi just went red. Bitcoin just went red, 89.5. It was pushing 89.9. The financials are green. All the tech stocks outside of the three I mentioned are red. ASTS just went red, which means Rocket Lab, did that go red? Rocket Lab's very close to going red, 61.80. Small caps are up, though. It's weird, dude. I mean, it's not technically weird, but it is weird. Markets selling off Amazon and buying small caps. I mean, I guess I get that we're getting the rate cuts, but small caps up, financials up, tech down. I mean, yeah, the R word of the day is rotation. It's hard to deny it. It's hard to say that's not a real rotation there, especially if that continues throughout the week. If we see Amazon and Microsoft and the names continue to get hit, but small caps, which are a bit more, let's just say, risky than Amazon, go green. That is pure. There's the heat map today. As you can see, everything pretty much red except Tesla. from the tech side. That is a rotation. That's scaled. That is a rotation. Silver and gold also. Look at that. They're not stopping. Silver's up 2.5%. Gold's up 0.7%. Gold very close to its all-time highs. VIX is up 3.5. Yeah, the VIX is not affecting financials or small caps, but they are affecting these tech-heavy names. I don't know, man. Do we end out December with tech selling off and a full-on rotation? Rocket Lab just goes red into small caps. It would not be crazy to see that. It would definitely be very annoying for a lot of fund managers that are trying to, make their portfolios match their benchmarks. But then again, if the S&P sells off, their benchmarks technically go lower. And if all of them start rotating into small caps, then that only exacerbates the compounding downside. Palantir's still holding green, though. You would think a stock like Palantir would be red while all these other names going red. Palantir is holding up, Tesla's holding up, Meta's holding up, Nvidia's holding up. But almost every other tech name is not. Even Netflix getting hit right here. Even Netflix, 94 right there, continues to get hit. Walmart was, I don't even think we noticed it on Friday because we were obsessed with the Oracle news, but Walmart's at all-time highs and it was up 2% on Friday. So it's like we're selling off Amazon and Microsoft in the streets buying Walmart and small caps. Broadcom, 351. She is looking like she wants to go potentially below 350 right there. 2.5% down here. My goodness. Dell's up 2% a little bit. All right. So some of the semis getting some love. What about SMCI? That's down. SMCI has been crushed over the past couple of weeks. Lam Research, that one's up about 3%. How about Intel? Intel 0.4%. ServiceNow, they're thinking of acquiring a company for like $7.5 billion. Street doesn't love that announcement. They are having a stock split at the end of the month, but Street did not like the news of them potentially acquiring I think it's a cybersecurity company, if I'm not wrong. 8.7% down on ServiceNow. Applied Digital, that one's down. Data center trade, I don't think that's anything specific to APLD, but that's just all the data centers getting hit. Now, ironically, the data centers are getting hit, but NVIDIA is not. Usually NVIDIA leads the downside on the data centers. This time, I think it's Oracle that's leading it. Oracle right there. Wow, 3.3%, officially the lowest in basically 6 months. Yep, lowest. Last time we even got close to this was about 3 weeks ago. I mean, last week we were at that 187 range, but we kind of bounced from there. So 183 down from 345 on Oracle in the past couple of weeks. Lyft is down 6%. I think Lyft is only down because Uber was down last week, and Uber and Lyft are down again today, not only because of the Waymo news last week, because of the Tesla news. Every time there's a Tesla headline on robotaxis being exciting, Uber takes a hit, which is unfortunately the narrative this stock is stuck in. Same thing with Duolingo. They could have amazing earnings, and then Apple comes out and says, we're going to do this with live translation, and then boom, Duolingo gets hit. It's really just in that bucket of headlines around robotaxis, even though one may argue that Uber is going to be a central player toward the robotaxi ecosystem, but it's not how the market thinks of it. Tesla right there, 476 down. Wow, we hit 481 on Tesla, 481.37, touched quickly. Now back down to 476. Where's S&P? S&P 683 got to 685 today. I don't know how the S&P stays green if these names continue to fall. The only hope right now it's staying green is Nvidia and Tesla. If those go red, then S&P is going red. But so far, that's been enough. Because Goldman and JP Morgan that are part of the S&P, those going green are good, but is it enough to hold it up for the day? I don't know. Even though, yes, those are at all-time highs. Goldman right there, 903. As that's green on the day. AMD's holding up a little bit, 1.3. AMD basically following NVIDIA at this point. Grab is, this is, again, I just don't have a way to explain this. Down 2%. There's nothing fundamental in the business. There's nothing external that I can explain for why it's getting hit like this. But I do know that it's hard for, if the S&P is not holding up, Grab to hold up. Now, this could be a shakeup before the GoTo news comes out. That could also be something that's playing out, but going below $5 there does not make sense to me on any fundamental level. there's just not a way I can meaningfully explain that. NVIDIA, there is a red candle coming in. She's trying to hold on to 176. Amazon, 224. Why? I don't know, but it's going red. And then Microsoft continues to get hit. Google as well continues to go red. BMNR is down 4% because of ETH, right? BMNR down 3.7, whereas ETH. Technically, I don't know if BMNR should be down that much. ETH was kind of around the same price. I mean, I guess it could. You have the multiple compressing here more than anything versus following ETH 1-to-1 in price action. Bitcoin is, yeah, we just lost 89 on Bitcoin, so that's also part of the reason. Now, granted, BMNR had a massive move last week, and ETH didn't have that big of a move, so that was MNAV expansion. Today, you're seeing a little bit more contraction on that MNAV. Nebius down 5, ServiceNow down 10, SMCI down 1, Rocket Lab down 2, NVIDIA still holding 177, so it's being a champ right there, holding that up. And then Meta holding the high 640s. Microsoft continues to get hit. Google continues to get hit. And then Tesla, 478, which is helping out. Rivian, this one has been safety over the past couple of days, which is quite incredible. It's kind of like Rivian's trying to convince the market they're a tech company, not a car company. But Rivian right there at $19. It's up almost 25% from Tuesday. What's the headline? I don't see a meaningful headline here. I mean, you even got some Fed talk that's bullish. You got Stephen Moran coming out saying that we need to cut rates even more than what we are right now. He did vote for a 50 basis point cut. You know what I think it is? Honestly, this is just my interpretation of it. I just feel like the AI trade is getting exhausted. Not to say the AI trade is done or it's dead because you have too much earnings growth to support it. But there is that kind of feeling that like the justification for this is the market's reaction to the Oracle OpenAI news last week was just so intense for such a stupid reason that it makes you sit back and be like, you know what, maybe the market wants to take a breather from this AI trade. Like if the Fed easing and Jay Powell being the most dovish in almost 2 years wasn't enough. And I say that with some humility here because the S&P 500 is like 7 points away from all-time highs, right? So it's just that overall push to 7,000 that everyone's begging for, including myself. That needs the AI trade to really pick up. And unfortunately, a lot of these names, I think, are just tired. And again, you can't blame Broadcom for being tired. It's still up 50% year to date instead of being up 80%. It's like, okay, you know, that's like, can't get too upset about NVIDIA. As much as I think NVIDIA is cheap right here, it's still up 25% year to date. That's beating the S&P by a wide margin, even though it's not, you know, up 40% year to date. So that is my hypothesis right here. And that could flip easily if sentiment flips throughout the end of the week. But I think that's your argument. If you don't have a headline, I think that's your argument for why the market might be lagging on that potential all-time high that people are waiting for. Tesla, are we back above 480? Okay, Tesla is what's holding us up right here. If Tesla dips, that's where the S&P probably gets hit. Tesla and NVIDIA being a champ, NVIDIA trying to push back up to 180. Tesla and NVIDIA really carrying this market today. Wolf is down 10%. Yeah, all the data center plays getting gutted today. Absolutely gutted. Amazon as well is getting hit. Big Bear AI. So again, this is a name that's that's down 6%. It's not a name that's easily going to do well if the market is tired of the AI trade. So, those high beta names, they're just going to need a lot more earnings growth to prove that they deserve a multiple if the market is afraid of AI. Nebius now down 5%. Walmart's just went red. Rocket Lab, 5% down, just lost 60. Hit 64 in the pre-markets. Microsoft continues to go red. Google continues to go red. IREN, 8% down. My goodness. This one's just getting annihilated today. A bit worse than the other ones. Hood's probably getting hit with this as well. Hood is getting hit with this as well. Down 2%. Robinhood 117.45. on the day. Again, Hood has an event tomorrow that could potentially, reverse things, but it tends to make a big pump when they have really good announcements. But it's also if the macro is getting hit, Hood's going to be susceptible to that badly. What do you think about unemployment tomorrow? I think we're going to get a bad labor report, but it's only going to reaffirm that we need to cut rates. The problem is, we talked about this last week. We've been trying to make bad news turn into good news because we were uncertain about the rate cut, and this is how quickly the market environment changes. We got the rate cut, so now bad news could actually become bad news if it's a really ugly November jobs report. Now, given the jobless claims that we saw in November, which were basically within expectations, some of them were better than expectations. I don't think it's going to be that ugly. If it is that ugly, the market's going to start thinking, hey, who's going to be buying, Celsius if people are pulling back their spend because they don't have jobs, right? Celsius is just an example for many different consumer products that are out there. Or Starbucks, I think, is a better example, Chipotle, et cetera. And that might, in general, create a little bit of fear of an earnings recession. But it would bolster the argument for a rate cut in January, which would be bullish. It's just that bullishness would have to match the asset prices that would have to still put up good earnings in the face of a labor market that's weak. Tesla right there, 478. Ray says, as I'm sipping on a Celsius. Dude, you people that drink Red Bull and Celsius in the morning are crazy. Like, actually crazy. Like, I love a good, nice, cold Red Bull. I'm all for that. But at 9 a.m., at 8 a.m., y'all are wild. Like, actually wild. Rivian up 1.9. Tesla, she's trying, dude. Shout out to Tesla. She's really, if Tesla didn't hold this 5% right now, we go red S&P almost instantly. So whoever's buying to the S&P's up by $1. S&P is really trying. Look at that candle. It's literally Tesla and NVIDIA holding it up. That's it. I drink my first Red Bull at 6 a.m. See, that's crazy. I'm sorry, but that's crazy. 6 a.m. Tesla right there, still 480. Still for where's VG? Yeah, where's VG? VG dump $6, down 2%. It's weird though. It's a really weird price action today across the entire market. Broadcom's down 3, Nvidia's up 2, Tesla's up 5, Bitmine's destroyed, Goldman Sachs is all-time highs, AMD following Nvidia, and then Intel kind of great. Like, a lot of it's not making that much sense outside, because if you also believe in rotation of small caps, then Tesla and Nvidia should be red. But you're not really seeing that. Bitcoin, Bitcoin, that's ugly. It was just at 88.9. It's at 88.2. So you just lost $700 right there. This is a different kind of Christmas rally, in my opinion. Yes, I agree. This is a different type of Christmas rally. Well, at least the good thing is, so this is it. Look, if you believe in these stocks and you believe in, the bull case around these stocks, this is the time to potentially buy back covered calls. So on Friday, I bought back a decent chunk of my Hood covered calls, not all of them, but a decent chunk. I did this with NVIDIA 2 weeks ago. So a lot of my Hood shares are now naked, and I can choose to either sell closer, aggressive covered calls or just keep them the way they are. And all my NVIDIA shares, I have 0 covered calls on NVIDIA. So the one good thing about this downturn is it honestly let me get out of a lot of my covered calls, and I made some good money on the covered calls as well. But will I nail the timing on closing the covered calls when the stock falls and then leaving them naked for the stock to run? Is the stock going to run? That is the question going into the end of the year. But we're going to have to see. Tesla right there, 477. Broadcom, 350. All right, Tesla's losing a little bit, 481 to 477. Broadcom wants to go below 350. It's down 2.6%, 5 cents away from going below that level. PayPal holding up today. Palantir holding up a little bit of green. Wow, CoreWeave, 6% down. Ugly. Santa's unemployed. Bitcoin below 88. Oh my goodness. Last 2 weeks of December, folks. It's time to see if we're December 2018 or if we are potentially going the opposite route. Oh boy, the Trump tweet. I don't know if you guys want me to read this Trump tweet. I don't know if you want me to read this Trump tweet right now. So, Rob Rayner, I might be saying his last name wrong. I'm sorry for that. He did die yesterday along with his wife. They were murdered. Allegations are that it's their son killed them. Trump just tweeted, "A very sad thing happened last night in Hollywood. Rob Rayner, a tortured and struggling but once very talented movie director and comedy star, passed away together with his wife, reportedly due to the anger he caused others through a massive, unyielding, and incurable affliction with a mind-crippling disease known as Trump derangement syndrome. He was known to have driven people crazy by his raging obsession of President Donald J. Trump, with his obvious paranoia reaching new heights as the Trump administration surpassed all goals and expectations of greatness, and with the golden age of America upon us, perhaps like never before, may Rob and Michelle rest in peace." I mean, again, I don't know if that was the best thing to say about someone who got murdered, that the reason he got murdered is because he had TDS. But that is what the president just tweeted. I mean, look, I don't know that much about the story. I saw the headline last night. A lot of reports are that their kid ended up killing them, which is they had stab wounds. But that is kind of wild for him to tweet that this morning. NVIDIA right there, 177, S&P 682. Robinhood continues to decline. Broadcom still holding just above 350, and then Tesla at 476. It's not really sensitive. Yes, I would agree. It's not necessarily reading the room either. I mean, at the end of the day, you could. I don't know that much about the guy, and if he had Trump derangement syndrome or not. I really never kept up with his personal life, but the guy got stabbed last night in his home with his wife. And Trump is blaming the killing on the anger that he has been feeling due to TDS. Not necessarily the most sensitive thing to say. S&P 500 right there, 682.45. Celsius still holding on. S&P looks like it just wants to go red. It's 50 cents away. It looks like it wants to go red. There's no news on the neoclouds outside of the Oracle stuff. I think Oracle is kind of your main argument for why the neoclouds are getting hit. Oracle right there, 181.95. That's down 4.2%. Oracle did sign about $150 billion in new leases for data centers. That was announced on the earnings call. That's still not being enough to get the market to think the data center ecosystem is safe. Oracle, though, that's an ugly move down, especially from last week. Bitcoin 87. There you go. Losing 88. 87.9. Obviously, that's hurting Hood. Coinbase should probably be getting hit as well. Coinbase 250. Yeah, Coinbase down 5%. Who is taking profits before end of year? So here's the thing, and here's the sort of mental model to work through. I asked this question last night on the Future Show. S&P now 14 cents from going red. My question last night was, if you get a pump back to not October highs, but let's say NVIDIA gets to 200 by end of year, which is not super. Well, for NVIDIA it's good, but not every stock would reach their old. I don't think Hood reaches 150 if NVIDIA reaches 200. But let's say those stocks get 5 to 10% higher. Do you take profits early in January because you're going to hedge against some of the volatility going into next year? A lot of people that I asked last night said yes. A lot of people said yes. If NVIDIA gives me 195 or Hood gives me 140 again, or I get some of these extreme, Oracle gives me 195, I'm taking some profits. But if they don't give you those levels and you're still holding a decent sized profit, even if it's not a massive profit, do you still sell towards the end of the year now? That's the psychological battle I think a lot of people are going to have, which is that they think there's this end of year rally and they're waiting for that rally in order to take profits. But if they get enough evidence over the next couple of days that that rally might not happen, do they sell in the fear of NVIDIA collapsing to 150 because 176 is obviously better than 150? And I think that's going to be a game the market plays with each other, or people play with each other going into the end of the year. Tesla now 475. You got 3 red candles right there from 481. Because I think almost 90% of you guys said if you get a pump towards the end of the year, just to protect against some of the downside of 2026, you're going to take some profits, which I think is fair. Like if you get a big move, you don't know what 2026 is going to hold. All right, even if you sell 10% of a big position you have, that's not horrible to have that cash on the sidelines. But now the question is, do you even get that type of a move? Is the market willing to give it to you? And today's price action in the early trading session is just not conducive to that yet. And the problem is we don't have a catalyst for the rest of the year. There's no catalyst. There's no rate cut. There's no macro data that's like actually going to change anything. If anything, the macro data is going to be worse. So they're kind of missing a meaningful catalyst to get things going. I mean, if we get the jobs data and it's really bad, like, yeah, rate cut, but like it also could be, hey, earnings not going to be good in Q1 or whatever. So it's like the markets might not interpret that necessarily as the most bullish. Wow, Rocket Lab collapsing right there, 7%. Again, the only reason Rocket Lab ran, and I really, even if you love Rocket Lab, I don't think you can necessarily argue the other side of this, is because of the SpaceX IPO. There's no fundamental reason Rocket Lab was up 30% last week. And it's still holding a good, Rocket Lab was like $42 at the beginning of last week. So the fact that it's at 57 is not bad. But that pump cannot be explained through anything fundamental. Like, yeah, they had a successful launch and all that stuff, but that's not enough, right? Like that type of a move, you need a catalyst, and the SpaceX IPO was the catalyst. S&P goes red. There you go. Red for the day. NVIDIA and Tesla are still green, albeit not as green as they were. But the fact that they are still green just means that a lot of the 498 took a dip. And NVIDIA and Tesla might soon be ready to take a dip. Tesla, though, 481 to 473. So that one definitely back up below that 480 level. Applied Digital down 14%. Again, I don't think there's anything fundamental on APLD, IREN, or CoreWeave, or Nebius. All of them just in that data center bucket, getting nuked on a day like this. VG down 2, Starbucks down 0.82, TFC's up. Again, small caps are still okay. Regional banks are still okay. AppLovin, that's down 1%. Duolingo down 4%. Adobe, why is Adobe down 4%? They had a great earnings, and this thing's already down 30% for the year. Like, that's not good price action to see a name like this that had a relatively strong earnings, has already been horrible for the year, get hit. Is Salesforce in the same position? Salesforce, same thing, down 3%. Not good to see some of those names getting hit. And it's a question, like on Friday, it felt like a buy the dip. Is like this, I don't know. Does this feel like a buy the dip, or does this feel like the market's exhausted and it wants some capitulation or some evidence of this stuff turning around? Which would not surprise me if we V-shaped today, because there's no headline to cause all of this stuff outside of fears of the Oracle OpenAI stuff from last week. But we're going to need to see some evidence of that. Market is punishing software and technology services. Yes, that's correct. Let me pull up the heat map again. This is what we're looking at. Again, Tesla and NVIDIA helping us out. All the financials, all the healthcares, all the consumer defensives are still okay. Imagine if Tom is right and ETH hits 12K in the next 2 weeks. Dude, if ETH hits 12K in the next 2 weeks, if Ethereum hits 12,000 in the next 2 weeks, I might bring out the bucket challenge. Now, the OGs of the channel know what the bucket challenge is, but I'm not going to say it, because if it actually happens, there's no way in hell I'm actually going to go through with the challenge. And I'm not even going to risk it by saying it. But the OGs know what the bucket challenge is. 682, S&P just flipped a little green. There's a lot of new people that don't know what the bucket challenge is. There's a lot of new people that don't know what it is. Yeah, a couple people that got it. It's Mayo. I said this in 2024 or something. I don't even know the first time I was like, if XYZ happens, I'll eat a bucket of mayo. And I was freaking out because I was like, what if it does happen? For those that don't know, mayo, to me, I don't think it should be allowed to exist on planet Earth. Like if I was the president of the world, I would just ban it immediately. So I'm not going to say I would eat a bucket of mayo if ETH hits 12K. Because although I know it's not going to happen, on the off chance it does in the next 2 weeks, I can't eat this bucket of mayo, bro. Literally the brand for mayo, the leading brand, is called Hellman's. It's from hell. Like the thing is literally from hell. And people are acting like this is an ethical thing to eat. Like, no. Dude, I've ordered Uber Eats before, and I've specifically said no mayo on the burger. If they include mayo, I like get my money back. I report it to Uber Eats. I'm like, no. I'm not eating this shit. Like, it's just I can't do it. Cannot do it. Spicy mayo too. Yeah, get that off my sushi, bro. Don't give me spicy mayo on my sushi. A spicier version of hell. Oh wow, phenomenal. Spicy hell. Like, no. Not doing that. IWM going green, 253. Nvidia still holding. S&P's up by 20 cents, but it's up. Nvidia holding. Bitcoin 87.9 as well. Nebius, are we seeing a reversal? 80 to 82. Small reversal. Still down 6% on the day, though. All right, so I mean, this price action is very inconclusive. You don't have a lot to explain for this. I mean, really, there is no headline this morning, dude. It really is nothing. You have a lot of Tesla 520 calls, though, that are being bought to the tune of about 5 million for January 30th. So you got Tesla options flow that's pretty bullish, but Nebius, someone bought 4 million of 85 calls for February 2026, seeing that option flow come in as well. Oh, the Tesla 520 is actually 9.3 million of flows for January 30th, 2026. Option flow is relatively bullish, but not really an explanation for why we're seeing some of this pain right here. We have home builder sentiment. Let's get that breaking news. Stephen Moran's going to be on in a little bit. We'll hear from him as one of the new governors of the Fed. And then we'll keep going from there.
Homes in December rose 1 point to 39 on the National Association of Home Builders Index. That's a small beat. The street was looking for unchanged, but anything below 50 is considered negative, and sentiment has now been below 50 for all of this year. Now, of the index's three components, current sales conditions increased 1 point to 42. Future sales expectations rose 1 point to 52, the only one that positive. And buyer traffic was unchanged at a low 26. Builders continue to cite rising material and labor prices due to tariffs. Rising inventory in the existing home market also has increased competition for newly built homes. Now, regionally, on a 3-month moving average, sentiment rose everywhere except in the Northeast, but that is actually where it is the highest. Now, 40% of builders reported cutting prices. The second straight month that share has been at 40% or higher since May of 2020. And the use of sales incentives was 67% in December. That is the highest percentage in the post-COVID period. Back to you guys.
Okay, we'll take a beat on sentiment there. Thank you, Diana. Diana Olick. This is a very exciting week because we get all our data back from especially October and November. So it really kicks off with an unusual Tuesday jobs report coming tomorrow, where we'll get non-farm payrolls for October and we'll get the full report for November, which is going to be absolutely key. Of course, retail sales as well, see how the consumer's doing. And then Thursday, also exciting day because we get the first CPI report that we've had in about 2 months. So that will be key and up to date for November read on CPI. Of course, this is very important because not just are we for investors to figure out what's going on with the economy, but for the Fed too, which is data dependent. And we're trying to figure out if they have one more cut next year, which is what the dot plot said, or if they have 2 more cuts next year, which is what the futures market is saying, or possibly more. And then, of course, a lot depends on who the next Fed chair will be. And there's a little bit more intrigue and mystery here. I just wanted to pull up the Kalshi odds, which you can see have moved a lot since Friday when President Trump said both Kevins are frontrunners. That would be Kevin Hassett and Kevin Warsh. So Warsh's odds go all the way up there to, I don't know, in the 40s%, I think we are right now. Hassett still is the 45. Hassett still, 50% odds, but President has expressed satisfaction with both of them. I'm not sure it matters in terms of the policy outlook, David, but there is this view in the market that maybe Warsh would add a little more credibility because Hassett has been too close, which has sort of dogged his candidacy. I'm not sure necessarily that's true, but
Again, we're going to have to see how the market interprets the Fed new governor, but obviously Warsh would be potentially seen as a little bit less, I guess, politically obedient than Mr. Hassett. Bank of America, they have the most bearish S&P 500 outlook for 2026. 7,100, 4% upside. Expects valuation multiple compression as AI heavy buy the dream stocks face pressure. AI driven job losses could hurt consumption, extending weakness in tech. In contrast to more bullish peers, she recommends overweighting consumer staples and underweighting discretionary, arguing markets are currently pricing in overly optimistic outcomes. So this is the most bearish target I've seen so far on the street. I'm sure we'll get some more bearish targets, but the majority of them have been around that 7,700 level. Bank of America. Now, Bank of America wasn't really right about the rate cut view. I mean, they were pounding the table. We're not going to get a rate cut this year. We ended up getting 2 rate cuts. Did we get 2 rate cuts this year or 3 rate cuts? We got 3, right? Yeah, we got 3. So they were wrong on the rate cut outlook this entire year. But now their argument is that 7,100 S&P 500 based on the AI trade fading, which again is an argument that's definitely possible, is their target. Yeah, September, October, December, right? September, October, December. S&P 681.50 goes red again. Rocket Lab down 5. Oracle still down 3. NVIDIA somehow holding the green today. Robinhood back to 117. And then Tesla still holding the green as well, 474. That one's not necessarily breaking down yet. Where's Amazon? Dude, this stock, 223. I think the street just plays with this stock, dude. I think the street just likes playing with this stock. And I mean, it is what it is. But my goodness, the street doesn't care. Amazon 223.91. Applied Digital down 12. Rocket Lab down 6. S&P 681. I mean, the other thing is when you talk about, look at Bitcoin, dude, 87.3. That one's just getting decimated. He was at 89 in the morning. The last 2 weeks of the year can completely change everyone's performance, not just retail, but institutional as well. I mean, like the hard part about this is why you give so much credit to the people that are able to compound 20% year over year, like Buffett and Ackman and Druckenmiller. I think he did like 30% for 20 years or something. Like to actually end the year with your year to date matching some of the highest levels means you've got to be really strategic and managed. And like the last 2 weeks of the year, if it's bearish, could completely ruin a phenomenal year in 2 weeks. It could happen. Easily it could happen. Which is, or it could, exacerbate the gains to a massive. I mean, if you're heavy Tesla, the last 2 weeks, if Tesla goes super bullish, it could be super amazing for your year to date. So realistically, I think now a lot of people are going to be wondering how do they protect their performance, and that might just lead to potential selling if this price action doesn't necessarily pivot. But again, the only argument I can give people is the AI trade is getting exhausted because there is not a fundamental reason. I don't even think you can point to valuation, bro. You can point to valuation of some of the high beta stocks, but you cannot point to valuation in things like NVIDIA and Microsoft. Like, that's not a valuation question. So there's no real headline this morning that I think caused this. Santa's going to have a lot of margin calls to make this season. Yes, Santa might have to make some margin calls. What is a gift that Santa can give to describe this market this year? What is the best gift that Santa could actually give to be emblematic of how the stock market is acted? Maybe he can give us some tariffs. That'll be the gift. Amazon continues to go lower, 223.81. Cypher 13% down. Ugly. A yo-yo, 100% a yo-yo. That defines this market. GameStop up a little bit, 21.40. Coinbase still down 5, then Bitcoin 87.2. A buy tweet. Oh my gosh. Well, don't have too much explanation on why, but nonetheless, this is the market action we're seeing. I think a lot of us also had a little bit of a feeling from last night that the Friday stock market action could potentially, carry into this morning. And unfortunately it has, but without a headline that we had on Friday. Let's listen to some of this analysis right here. This is Ruchir Sharma from the Financial Times. And I think this is their case potentially for the manifestation of a bubble in the broader market.
We are indeed in the midst of a bubble. Joining us now, Ruchir Sharma, Rockefeller International Chairman, and he's the founder of Breakout Capital. All right, Ruchir, you want to go through them 1 through 4 quickly if you have time? Tell me whether we're in fact in a bubble.
Yeah, David, as you know, there's a bit of a bubble in bubble talk these days, which is that everyone's talking about a bubble, but there is no standard definition of a bubble. So what I've tried to do in my FT op-ed this morning is to lay out a framework, which is that what are the 4 O's, so to speak, to look for to know whether we're in a bubble or not. And those 4 O's are overvaluation, over-ownership, over-investment, and over-leverage. Now, very quickly to go through these, for overvaluation, I think the case is being made. I also look at prices, which is that if you look at bubbles historically, the big bubbles in history, which is that prices in inflation-adjusted terms typically tend to rise 10 times over a 10 to 15-year time horizon. And that's exactly what we've seen for the US tech sector over the last 10 to 15 years. And valuations, we know, are in the 95th percentile or so on most metrics currently, with only 99-2000 standing out as a period where valuations were high. Then briefly, as far as over ownership is concerned, and here I think we have some of the most telling statistics here, which is that today, Americans have 52% of their wealth, financial wealth, in the stock market. That's higher than where we were in 2000. In fact, America is possibly the only country in the world today where people have more of their savings in the stock market than even in property. So you have so many young people today who are just trading and saying, we can't afford to buy a home. Let's just punt around and try and make money off the stock market.
Look, that's a fair point. There's definitely over ownership in the market. I don't know if that's necessarily indicative of a bubble, but that obviously is indicative of market sentiment being more bullish towards stocks over other types of financial assets, which is going to lead to some level of overvaluation inevitably, because you're just going to have a lot more money chasing a lot fewer assets. But the earnings growth of those assets is what ultimately determines if the market can hold up. And S&P still red right here. Bitcoin potentially losing 87. I think that's the story that has to continue to play out going into 2026. S&P 681, Rocket Lab 56.99, Salesforce still down 3, NVIDIA somehow holding green on the day, which is quite incredible for NVIDIA to actually keep holding these levels. Yeah, too many people buying stocks is bad. I don't know if that's your narrative. You can say the same about too many people buying real estate. That's not happening right now. But if that were to happen, like that argument logically, I don't know if it follows
cross asset classes. If anything, it provides a lot more liquidity for these markets. But the things they're buying have to hold up, right? Like these companies have to be putting up phenomenal earnings for that money to even be flowing into these assets, or it's a bubble, right? Because like this was 2021, right? You have a lot of money going into the market, but there's no earnings growth to support it. Therefore, you get a bubble. I think that's a bit different right now. You have a lot of earnings growth to support it. But going back to what I was saying at the beginning of the show, Apple right here, look at that, down almost 2%. I think you just have a lot of exhaustion as well. It's not like these names are absolutely in the gutter. Google's at $300. Like that is not something anyone could be sad about. So it's a little bit of greed from our part, wanting a nice end of year run, but it's also pairing that with the exhaustion of the market, saying, look, I'm giving you 15%, which is double the historical average. You can't be too upset if I don't give you 20% for the year. Although losing 680 today and closing below 680 is not going to be good. ETH, are we below 3K? She is below 3,000, folks. And that is hurting BittyMine, down 7.2%. What's fear and greed? That's a good question. I think we need another 2% down for it to be extreme fear, but we are at 43 on fear and greed. It's not where it was on Friday. Or not Friday, sorry. The second week of November. That's when, we were at like 4 on extreme fear. That was 650 S&P. That was $100 on Hood, Palantir 140. Like we're just not anywhere near that. And I don't want to get to that just to get an extreme fear opportunity, but you're probably not going to get that until we get that level of pain. ServiceNow down 10%. Yeah, again, ServiceNow, the pain was for this acquisition they did or are planning to do. Oh, also they got downgraded to 775 by KeyBank. Our summary thesis begins with some worrying trends in IT back office employment data that we believe raise the likelihood that now gets brought into the at-risk from AI tent in the coming. Oh, wow. They think software is going to get hit by AI. At least that's what the downgrade says. ServiceNow's own AI products include a hybrid monetization structure that would mitigate some of the headwinds, but this has not kept other SaaS subsectors afloat. Further, we believe ServiceNow's position and perception as an AI orchestration winner may cede ground to Microsoft next year. While the government headwinds have not been as bad as feared as from a year ago, the scrutiny of spend in that arena is probably far from over. Plus, other than Adobe, the rest of our enterprise coverage is accelerating. Plus, now is spending more inorganically than it ever has ever. That's the acquisition we talked about. And valuation is not exorbitant, but still at a premium. Okay, so aggressive valuation, losing government spend next year, and Microsoft eating their lunch when it comes to AI orchestration. And then this general fear of software as a service companies not accelerating their growth, and Adobe and ServiceNow in that same bucket. ServiceNow down 10% right here. This is why it's so important that Palantir is growing, because if you're a software company and you're not putting up growth, the street immediately thinks that AI is going to take your lunch. And so if you're a software company, you really, really need to show that you can grow so that AI is a tailwind versus a headwind. S&P goes below 680. We touched 679.75. 679.75. Zeta's down 6%. Zeta, I mean, again, these names are not going to survive from a stock perspective if you have your big dogs like CoreWeave and Coinbase getting hit. A lot of these names are, very attractive in terms of their PE multiples, but you kind of need a bull market to keep those names having the flow coming in. It's hard for a Zeta to outperform if a lot of the other software names are down. And same thing for the data center. It's hard for them to outperform if Oracle's down. Look at Meta, dude, 638. Meta's pumped from that canceling the metaverse headline, completely erased. It touched 687 that day, right back down to 639. Broadcom's below 345. Oh my goodness, dude. That is a freaking 22% hit. 21.7% hit since the earnings. Goodness. Broadcom falling off a literal cliff right there. Oracle too. I mean, it didn't go below 180 yet, but 180, 170. Stop loss is getting triggered soon. Yeah. I mean, it seems like for Broadcom, Friday, the stop losses were triggered aggressively, 5% down, 10% down, 12% down. But today it's continuing. 344, down 4.3%. Nebius looks like it wants to go below 80. Nebius 80.84, down 7.8. Yeah, Broadcom's still up a lot this year, regardless. Silver and gold are the ones that are still outperforming. I don't know. Look, I don't know if this is where you rotate into silver and gold. Like, it's amazing to see the price action here, but I mean, both these are up almost 65% year to date. Do you sell your Nvidia and jump into silver? It's like, I don't know, dude. I think that's kind of risky, to say the least. It's cool to see that price action, but unless you think it's signaling that the stock market has to fall, commodities have to go even higher, like what is your upside? Are you trying to go for another 60% on silver in a year? It feels unlikely. Silver and gold still getting some more of that momentum. Nebius right there, 80.80. ETH still below 3,000. And then Amazon, 1.2% down. Rate cut odds into January. I think right now we're at 25% for January. We are at, 24.4. So tomorrow's jobs data could get this higher, but I don't know if that's a catalyst. Can anyone think of a catalyst going into the end of the year? Like a legit market catalyst outside of just seasonality? Because I think we're done. We don't have any earnings. There's no Fed talk that necessarily will get us there. I think data centers are down because of Oracle. That's the only headline I have for you on data centers. And why is Oracle down? I think it's a continuation of the Friday headline, which then begs the question, is the Friday headline reasonable? And I don't think so, but I think that's how the market's interpreting it. And Oracle did deny that headline. Why is Broadcom down? I don't understand it. Again, that one, I think it was more so a question of the multiple being too extended. They didn't even have a bad earnings. Again, they didn't answer the OpenAI question in the way that the street liked it. But it's not enough for a 20% decline. Like that means this is the street's fault. They completely understood the OpenAI deal. So this one, I think, is just multiple compression. And I don't know, I guess too many people were bowled up thinking the multiple would be sustainable. Which, again, it doesn't mean Broadcom's the most overvalued company in the world. It just means the multiple was up there and it's now getting re-rated. Bitcoin, 86.7, NVIDIA, 50 cents away from going red. Bitcoin absolutely bleeding through. 86.7, down from 89.9 in the morning. And then NVIDIA following suit. Where's Tesla's? Tesla's still holding. Tesla, 481 to 472. She's next on the list if NVIDIA gets hit. Are we expecting bad job numbers, rate cut probability as we get into the end of the year? Yes, the rate cut probabilities probably go up if we expect bad job numbers. But is the market actually okay with the bad job numbers? That's the question. IWM now goes red. All right, so now everything's fun. Small caps, you had that little rotation in the morning. That goes red as well. IWM year to date, by the way, up 14%. Palantir is green. So Palantir did have an announcement this morning. They signed which again, Palantir being green on a day like this is incredible. They signed a deal in France, a 3-year extension Don't have any money on this deal, but that was the headline from the morning. 3-year renewal with the DGSI. This is France's domestic intelligence agency. And Karp said, this contract renewal reaffirms Palantir's commitment to serving the interests of France since 2016 and ensuring the security of the French people. So yeah, you had a nice 3-year contract right there, but don't know if that's enough to keep the overall market green over. But that is overall helping Palantir this morning. Markets are rotating into financials and healthcare today. That's for those looking for the rotation trade. JP Morgan's green, Goldman Sachs is green, Lilly's green. It's the same story over the past 2 weeks. Financials and healthcare, and in particular pharmaceuticals. Once again, financials and healthcare are bullish, but they don't have the earnings growth that tech does. So I wonder, how low does tech have to go before the market's like, why am I paying for Goldman Sachs's EPS versus Microsoft's EPS growth? And so I think it can be a rotation. I don't know if that rotation has to necessarily last in the way that some analysts for 2026 think it does. S&P, a little bit of a green candle, 679 to 680. It's still red on the day. Where's SoFi? SoFi getting hit? Dude, SoFi can't catch a break. Financials go green. But oh, SoFi's a tech company now. Then when tech gets green, it's like, oh, SoFi's just a bank. Goodness, 2650. Let's get an update on some Fed talk, and then we'll keep going from there.
John Williams, New York Fed president, saying monetary policy is well positioned as we head into 2026. That is language the Fed chair used at the meeting recently that people took to say the Fed was on hold, but not entirely clear this is where Williams is headed. He says downside risks to employment have increased while upside risks to inflation have lessened somewhat. At the same time, he says it's imperative for the Fed to restore 2% inflation without increasing risk to employment. He does expect tariffs to end up having just a one-off effect on the price level, doesn't see continuing inflation from tariffs. The tariff effects he acknowledges have been more muted and drawn out than anticipated, though they have contributed, he believes, 0.5 point to the overall inflation level. Despite the uncertainty that's been out there this year, Williams says the U.S. economy has shown considerable resilience and upgrades its forecast, sees 2.25% GDP next year, up from just 1.5% this year. He sees unemployment gradually declining over the next few years, while inflation next year will be below 2.5%. The economy now, he says, appears to be turning the corner. So, guys, you could take that either way. I could see him supporting additional cuts from that statement, or this idea being well positioned, being taken by the market as saying we're on hold for a bit.
Yeah, it's definitely more dovish than the commentary that we got on Friday from the Hawks. Like you spoke to Goolsbee and Schmidt. You also have some reporting on the Fed chair race between the two Kevins.
Yeah, it ain't over, Sarah. What we're hearing is that there has been some pushback communicated to the president, to the administration on Kevin Hassett, and this could explain this gap that we had where the interviews were off and then they were put back on, at least for Kevin Warsh. And we've heard two things. One is that some people are complaining specifically about Hassett, and others, rather than doing that, are promoting the idea of Kevin Warsh to be Fed chair. So, and this has been communicated to the president through a variety of different ways. And so there is some high profile blowback on this inevitability of Kevin Hassett becoming Fed chair. That might explain why he took more, by the way, of a view of independence of the Fed in his interview with Face the Nation yesterday.
But Steve, if there's this belief that he's too close to the president and that's seen as a negative, but isn't it still a positive when the president's the one making the decision?
Yes, that is true. However, I think the president is almost certainly going to be mindful of the effect of the Fed chair on interest rates. And I know that the president, we know that he wants lower rates. And the interesting question is, how do you get there? Do you get there with somebody who will go in and do your bidding at the Fed and reduce rates? We've seen how the 10-year has behaved while the Fed has been cutting, and it really has not incorporated all of the rate cuts from the Fed. So I think there's some discussion that's being had from market people to the president about what kind of impact the wrong choice might have.
Although that's why I think that this is all much ado about nothing on both of them, because the bond market is always going to be in charge, and Kevin Hassett knows that, and Kevin Warsh knows that, and so if there's like some jump in rates because of questions about credibility, that's going to pull him back. That's why I think it's kind of overblown.
Well, it may be overblown, Sarah. I know what my reporting says, which is what it is. And there may be that people are overly concerned in ways they shouldn't. I know that people have also said to the president, both would be a good choice. That's also part of the reporting that we've had, and we've reported that as well.
Is Waller out? Is he still being interviewed? I think that he would probably be a lot of investors that I talk to first choice.
I've heard the same thing as you on that, Sarah, but I've been unable to confirm if there's an addition or there is a rescheduled interview of Fed Governor Chris Waller at the.
All right, so it's going to come down to one of the Kevins, and the market's ultimately going to determine how they care about it. I do agree that it doesn't really matter which Kevin it is, because if yields spike, whoever the Fed chair is going to have to capitulate. But so far, yields are at least steady at that 4.1%. Tesla holding 474. Ethereum just below 3. Bitcoin trying to get above 86.7. Nvidia has not gone red yet on the day. Still very, very red throughout the market. Although, again, hood 115 to 118. Little bounce. Broadcom still down at 344, at least up from 343. S&P 680, really important to hold that level. 679, we did hit, trying to get that green candle up to 680. Yeah, Amcor is doing okay as well. Amcor 43. Well, it's up a little bit, but still down from there. Again, Amcor, this stock was at 30 2 weeks ago, right? So a lot of these you just can't complain if they do take a breather. 681 now on the S&P. What else? What else do we see today? Is anyone going on vacation soon? At the end of the year? People going to Mexico or something? Or people just staying at home, enjoying the holidays with their families? We don't really even get a break in terms of the market. Like Christmas Eve, it's like a half day, right? And then Christmas is closed, but then the market's open after that. So it's not like you're getting that much of a break, at least for people who care about the stock market like that. It doesn't necessarily close down. But like teachers, my sisters, my mom were teachers for a while. They get like 2 weeks off during the end of December. It's always been that type of work break. Mexico City, Puerto Rico, Colombia. Just got back from Thailand, Hawaii. Too broke for vacation. Dude, vacations are relatively, if you're going out a week to spend time somewhere, I feel like I haven't been on vacation in a very long time, but I'm just ballparking. I think it's like $5,000. Like if you're going out to spend somewhere for a week, food, travel, hotel, I think it's like minimum $5,000 you got to have. So yes, they absolutely are expensive to go vacation. 10,000. Okay, I don't think you need 10,000. 10,000 feels like it's very luxurious. Maybe like split the difference, 7,500. But I feel like someone could live on $5,000. It does depend though, right? Like the hotel room, is it $200 a night, $150 a night? That stuff does add up. Bitcoin 86.6, still not able to make that move above 87. Nvidia 176. S&P, she's trying, but she continues to be red. I was out for 3 weeks in Thailand, 6,000 for everything. Wow. Yeah, Southeast Asia, if you've got some American dollars, that can go a long way. Okay, family of four is a different question. I'm thinking if you're by yourself. Family of four, yeah, you're definitely spending more than 10,000. If you're by yourself, hopefully it's not much more than 5. Oracle still down 4, Broadcom still down 4, Nebby is still down 6. We'll get Moran on soon and see what he has to say about his thoughts around these rate cuts. The fact that he dissented for 50 was quite incredible. I thought he was going to vote for 25, but he ended up dissenting. And they had more than enough votes for that 25 basis points with the 9 people that voted. But he was one of the 3 dissents that were there. And they don't have 3 kids, they can be expensive. Dude, I want 3 kids. I literally, that's my number that I want. It's gonna be expensive though, bro. It's gonna be so expensive. 3 kids. It's kind of crazy. Even my uncle, he has 1 son, and his son is definitely expensive. Like, just to, you know, deal with all the activities and things that the kid wants to do, and 3 of them would be crazy. Yeah, I want 2 girls, 1 boy. I've always had that idea of 2 girls, 1 boy. I feel like that'd be the coolest combination. SoFi still red as that one goes down. By the way, for the meetup, we're going to have a lot of mods come out to the meetup as well. So I think we will have Dougie there. We'll have Matt Money. We should have Ray, Michelle, Tess will be there. So a lot of folks that you guys see in the chat every day should be able to make this meetup. And so that'll also be pretty fun for everyone to interact with them. Matt Money's not confirmed yet, but I think he's going to be there. Steve is definitely going to be there. So that'll be really fun for people to meet Steve in person. But I think we should have Matt. Hey, Chris, I'm going to talk to him today and see if we can get Chris out there. I think he should be free that weekend, but I'm going to talk to him today and see if we can get him out there. Meetup link right there. Put in the chat. It's in the description, but put it in the chat as well. SMCI still down. Yeah, the semi is still ugly, down 2.2. Tesla, though, 478. Every time it tries to go down, you get a candle back up, 472 to 478 on Tessie. Jason probably won't be there, but when we do the LA meetup, we'll try to make sure Jason's there. That's closer to where he is. Jason was actually at the Palo Alto meetup last year. And he had like 10 people listening to him talk about technicals for like 4 hours. So we'll hopefully get him there on the LA one. Is Tanner coming to the meetup? You know, Tanner is welcome to come to the meetup. I don't know if Tanner is busy that weekend or not, but Tanner is very, very welcome to be there. It would be fun. It's only an hour flight too for him. It's not too far. Big Blue Stripes, thanks for the super chat. Admit I just posted my takes for the meetup. I own a photo booth company. I would love to provide photo for the events. Okay, so please email jess@akcoms.com and we'll see what we can do. So send her an email. And we're actually looking for a photographer. Honestly, we're going to hire a photographer. So it actually is convenient that you're messaging right now. So send her an email and we'll see what we can get set up. BMNR, is that one still getting a hit? BMNR down 6.2. That's still getting hit. 32.70. Oh, S&P just flipped. Got a little flippy flip to green. Little flippy flip to green. The algo's done. Are they done being annoying today? Do they have their mood swing? Do they take their medicine or their market coffee or their morning coffee or whatever they needed? Are we good to move higher? They're literally like children, bro. Speaking of children, algos are literally like children. They have to throw their stupid little tantrum, cause us to lose a ton of money before they turn around. Wow, Rob Rayner's son arrested by LAPD. My goodness. The son might have actually done it. By the way, someone in the chat mentioned that he was in Wolf of Wall Street. I saw his face last night, and look, guys, I'm not the biggest movie guy. You know me, so I didn't really know who he was. I don't think you guys expected me to know who he was, but I recognized his face, and I just watched Wolf of Wall Street 2 weeks ago. So it made sense when one of you mentioned he was in Wolf of Wall Street. He was the dad. He was the dad of Jordan in Wolf of Wall Street. I didn't know that. So when I saw the news yesterday, I was like, I know this guy. I don't really know this guy, but I know this guy. But the fact that his son might have been the killer is crazy, bro. I mean, my goodness. The son killed his mom and dad with a knife, like absolutely wild if that is the story. Robin right there trying to get back to 119 as well. Amcor going green. S&P 682. Palantir 186. Tesla almost back to 480. All right, maybe a little 1045 reversal that we're seeing. Goes to show you Hollywood is crazy. Hollywood is crazy. And the stuff that happens in Hollywood and just the life people can get stuck in is absolutely crazy. $4 million for bail. That means LAPD has some real evidence on them. $4 million for bail means that they do not want this guy to be out on bail. They might have some real legit evidence here. And that might be happening right now as well. All right, Tesla 478, Palantir 186, Oracle 183, Zeta's down 5, GameStop's up 2.3. Yeah, I was looking at some of his movies last night, Rob Reiner. Again, I recognize his face. I just didn't know from where. He got some real classics in here as an actor and a director. When Harry Met Sally, All in the Family, This is Spinal Tap, Wolf of Wall Street, Bucket List, Few Good Men, which again, I haven't watched a lot of these, but still, Stand By Me. It's pretty crazy to see that play out the way it is. Nabius, 80 to 82. All right, let's see if Stephen Moran is on. We'll see what he has to say. The China headlines from last night, again, weren't the best in regards to the retail sales being down. Unemployment came in relatively stable, so that's not too crazy. But that's what the Chinese stocks are going to get. Also, Microsoft AI CEO Mustafa, here's what he said this morning. He expects superintelligence to hit medicine as the first use case. Says they already have systems that can diagnose any rare condition in the literature better than humans, cheaper with fewer tests and higher accuracy, currently in independent peer review ahead of clinical trials. I also think healthcare and drug discovery should be a massive, massive use case of AI more broadly, especially when it comes to superintelligence. And maybe that's why you're seeing a little bit more rotation too into some of the pharmaceuticals. But when we do see AI intersect with healthcare meaningfully, I mean, that should lead to like a lot of progress just for humanity. Yeah, gene editing, that's your other argument as well. I guess ARCG is the best way to play that if you don't want to pick a specific ticker. Tesla still trying to push 480. S&P still holding green, JP Morgan holding green, then Robin trying to get to 119. Even SoFi capping up a little bit here. Do we still think Netflix is getting Warner Brothers? Because I still feel like it's up in the air and it's not guaranteed at all that Netflix got this. Now Paramount's bid continues to get worse, but in terms of like people thinking it's actually going to go through. But I don't know if that means Netflix still gets it. For 38 a share, dude, Netflix cannot afford 38 a share. That would be a little aggressive. Do you guys think, okay, I had this random thought the other day, and I think most people probably will disagree with it. And I don't even agree with it, but I'm just putting it out there. Do you think Netflix should allow people to upload their own content and become a pseudo YouTube? Like, I know it's super contrarian and it goes against everything Netflix has been doing. But I mean, imagine watching the market open on Netflix. Like, I don't know, like, is there a world where, see, everyone's saying no. I knew that would be the immediate reaction. Who knows, bro? I mean, they need content, right? That's the issue. They don't have content. Like, what if they just allow people to upload their own? They can still algorithmically filter it, right? They should call it YouTube. Look, I'm just saying, Netflix has massive distribution. As a creator, it takes 2 seconds to just upload the video to a separate platform. I mean, they would get the creators pretty quick, I think. The question is, would they get people to be more engaged if they had user-generated content on the platform? Also, what is Netflix defined as a company that can never have user-generated content? Like, I know their moat has been premium content, but I don't know if it's not like there's a rule that they can't allow that. It just would be a total 180 from what they've done before. Oh, Breaking Bad season 6. If they brought back Breaking Bad, yeah, that would get people on some Netflix. Netflix does not have infrastructure for diverse content distribution. Well, the thing about Netflix that gets everyone to claim they're a tech company is their algorithm, which I've always thought is a really weird. Everyone's like, oh, well, Netflix algos for content distribution is like so good. And I'm like, dude, they never find me something I want to watch. Like, the only time I want to watch something is if I know it happens to be on Netflix. Now, my sister, on the other hand, she'll randomly click on something that's recommended to her and she'll actually watch it. And I know a lot of people are like that. But for more picky content consumers, their algo sucks. And part of the reason the algo sucks is because they don't have any good content. With YouTube, you type in a search term and then immediately the YouTube algos get going in the back end and they find every single video where there's like 1 trillion videos per topic that are relevant to your query. And then it shows you stuff you might want to click on. Netflix does not have that. But also, is it that complicated? Like, it's a content recommendation algorithm. Like, the reason YouTube's able to do it is because they have so much content from the users, but it's not like an impossible challenge to generate an algo that can recommend content. YouTube has AI video making tools for shorts. Netflix will maybe have AI made videos or movies. That's some Black Mirror stuff right there. Yeah, and also the amount of compute it would take to make an AI movie through a prompt. I mean, talk about Netflix increasing their cloud spend. That'd be pretty aggressive. 184.91 on Palantir. That's a good question. Who should Netflix buy out? What's besides Warner Brothers, right? What's a more reasonable, smaller company that Netflix could buy out in the media space? Disney already has their Fubo thing going on. I don't know. Is there a little small studio that Netflix can? Okay, they can't buy out Disney. I don't think that's the regulators don't want Warner Brothers with that. I don't think Disney is going to work. AMC, I mean, could they transform the movie business? AMC is dude. Yeah, why don't they buy out? It's $1 billion company. What if Netflix actually transforms the movie theater business? It's definitely an asset heavy business, which maybe is not the best thing to take over, but Crunchyroll, that's perfect. Crunchyroll is probably going to be less than $1 billion. I mean, Crunchyroll can't be that much. Rumble, I don't know if that's relevant. Crunchyroll definitely seems like an easy one. Fubo's with Disney, so they can't. Sony owns Crunchyroll. Crunchyroll's anime, right? Yeah. Yeah, I'm on their website right now. They charge $12 a month. How many subscribers does Crunchyroll have? Let's see. Crunchyroll has 17 million subscribers. So that's what, 170 million a month in revenue? That's a couple billion a year. Yeah, Netflix could pay $5-6 billion for that. 2-3 times sales, and boom, take them out and bring over a host of anime onto the platform. Nvidia right there, still green, 176.88. That would make a lot of sense, especially if they're streaming partners to a lot of movies already. They'd be able to secure the pipeline for most part. Yeah, I mean, I think the AMC thing does make sense. How many people go to the... Dude, I was listening to a podcast over the weekend, and this guy was like, I go to the movies every single week. And I was just like, what? who goes to the movies every single week? I'm like, you are an anomaly. You watch the latest movie every week. Last time I went to the movies was to see Oppenheimer and I almost fell asleep. Like, I don't think people meaningfully go to the movies every week, but also there hasn't been a big movie outside of Oppenheimer. Like, I'm sorry, I'm not going to the movies to see Wicked. Like, no. I'm not. That's not compelling me to the movies. It's got to be something big that gets people there. Like, has there even been a good movie in 2025? Or a relevant movie in 2025? I know I'm not a movie guy, but it's not like I've seen something pop up on the screen that's been like, you gotta get excited for this. Oh, we have an $8,500 target on the S&P. Let's take a listen to this. What this bull case might look like. Zootopia was a hit. That's fair. Zootopia was a massive hit. Zootopia 2. I did hear about that one. Marty Supreme, I haven't seen yet. The new Avatar, that one's coming out soon, right? Like this week? It's like that third version of it. The second version kind of sucked. The first one was amazing. I actually might watch that. I don't know if I go to the theaters to watch it, but the Avatar franchise I am relatively interested in as well.
Markets. Our next guest is bullish about the new year, says worries about tech's high valuations are misplaced. Joining us here this morning at Post 9 is Tali Leisure, Chief Market Strategist at the Wealth Consulting Group. Nice to have you in, T. Welcome.
F1 came out on Netflix though, right? Or was F1 like in the theaters? I thought F1 was on Netflix. Oh no, you're right. It was in theaters. But then it came to Netflix really quick. At least that's how I heard of that one. Or Apple, right? Apple. Yeah, you guys are right. Apple.
Thank you. Good to be here. Feliz Navidad.
You're pretty constructive on next year.
Yes, and I'm glad we're sitting down for that conversation because we see the S&P 500 achieving 8,500.
8,500,
yeah.
driven by?
Well, we see earnings rising, rates, as you were saying, coming down. And there's a lot of negativity that we think can power the stock market higher as sentiment improves.
Focused on the traditional AI trade, or does this thing continue to broaden?
Well, I think that tech itself should enable a broader market, to your point, Carl. And it's that innovation we think is going to power catch-up phase for the rest of the market, including small caps.
So margin expansion in addition to earnings, this part of the same story.
Absolutely.
Is that what drives the Fed to cut in that case?
So I think that on a trend basis, we are seeing a stability in inflation, if not a bit of a cooler dynamic. In fact, if you look at the consumer sentiment index, 5-year inflation expectations have done a round trip. They've come back to where they were exactly a year ago, which is amazing to me.
If you look at some of the outperformance lately of the cyclical groups, industrials, financials, energy have done really well lately. Some people are wondering if it's pricing in the better economic growth outlook that is expected next year, which is what a lot of these bullish views are based off of. Does that concern you? It's already happening?
No, I think that positioning and sentiment is still in the buy zone. A lot of bearishness here. When we get to extreme optimism, I'll let you know, but we're not ready to wave the checkered flag on this rally. We love the cyclicals because financial conditions are easing here and supporting a reacceleration, we think, in the broad economy.
So your view is that the cuts we're getting are nice to have, not need to have, as we like to say around here. Is there a point where it gets to be a need to have?
Well, I think that the silver lining of the story, you mentioned margins, is the weakness in the labor market. So that, if it had a concern, would be a potential headwind for next year, an acute softening in the labor market. And that, again, would kind of reinforce this notion that the Fed needs to keep cutting rates.
That's behind the more bearish calls we're getting now, is that, yeah, these productivity stories are amazing and the margin story.
All right, so the same argument right here around rate cuts. Let's head over to Moran, who I believe is now live, and we'll see what he has to say here.
I look at that things are getting to a place where anybody is really concerned about that.
That was Fed Governor Stephen Miron discussing inflation concerns on stage here in New York this morning. He's going to go from there to here, joining us on set at the New York Stock Exchange later this hour. Good Monday morning and welcome to Money Movers, everyone. I'm Sarah Eisen with Carl Quintanilla, live from Post 9 of the New York Stock Exchange.
Also today, home builder sentiment hitting an 8-month high.
All right, so he's not live yet, but we'll get him in a bit. Look, that $8,500 target, I mean, it's not necessarily saying anything that new outside of rate cuts and not fighting the Fed, which I think is enough of a thesis. Like, if we're actually cutting rates down to, Trump said 1% on Friday. I don't think it's going to be 1%, but if we're actually cutting them down significantly, I don't think you can fight the Fed. We just have to avoid a recession, which, again, I don't know if we get a recession easily when we're cutting rates. Like, it's possible, but if we avoid that and the AI trade stays strong, like you continue staying long, but it doesn't mean it's going to go up straight up in a line. And, some of that exhaustion that we've all been seeing could continue to play out. Tesla right there, still 477 on the day. We are already in a recession. So, like, the data does not necessarily say we're already in a recession. Now, you could anecdotally feel we're already in a recession, but a recession is defined as 2 quarters of negative GDP growth. We're not there yet, far from that. And meaningful jobless claims upwards of 350,000 a week, we're nowhere near that. Now, I looked at this stat yesterday about delinquencies, especially on student loans, subprime auto. That stuff is not necessarily going the best. But it doesn't mean we are, in a full-blown recession. Also, those retailer earnings that we saw, freaking Abercrombie, Lulu, like, those do not signal a recession. Yes, it's a K-shaped economy, but it's hard to say those are necessarily signaling a recession. However, there is an argument around holiday spending not being as strong. So take a look at this chart right here. And again, we'll get these holiday numbers early in January. But in November, Americans estimated that they would spend on average $778 on holiday gifts, down from $229 in October. This marks the largest drop in expected holiday spending in data going back to 2006. This is also $234 lower than last year's November expectation of $1,000. By comparison, during the 2008 financial crisis, the November decline was $185. So little stagflationary here, with the expectation of holiday spend going down significantly, at least the most significant since we've seen since 2006, from October to November. Do you guys spend a lot of money on holiday spend? Like, every year I think I'm not going to spend that much, but then you just end up you just remember that there's people you have to buy gifts for in your life. And it ends up being more than what I expect every year. Like, not even just family, but just like people close to you and associates and stuff. Like, you end up realizing, no, I got to give this person a gift. And it ends up spiking up. And then my mom's birthday is 3 days before Christmas. So that always plays a role as well. Yeah, most people are saying this. Yes, with 2 teenagers. Yes, very much so. Yeah, I mean, like, it ramps up into the thousands. Like, every year I think it's not, and then it does. And it's like I think last year it ended up being like $5,000 for me. And I was like, I didn't expect to spend that much, but it happened. NVIDIA right there, 177.27. Tesla now up 18% year to date, outperforming the S&P 500. So Tesla's officially beating the S&P, which is nice. At 210 when you had the Tim Waltz bottom. Not sure if people thought that would happen, but we are here, 477.80. It's kind of ironic too, because Tesla is the only Mag 7 that's showing zero growth. Like, even Apple is growing more than Tesla. But the market doesn't care. Market does not care. It is Tessie's world, and we are living in it. Let's get an update on Oracle and Broadcom right here. See how the market's kind of thinking of these two names as well, along with Micron.
190% this year alone. The forward P is roughly around 12 times, which they say justifies the growth. So they like the valuation. Overall, though, the Mag 7 may be stumbling, but the AI infrastructure build out is far from over, according to these Wall Street guys.
What about Broadcom? Took a beating on Friday after what many on the street analysts defended it and said was a pretty good quarter. It's down again today. What's the read on that one?
Post earnings, it was an 11% drop, to your point, which is surprising. But there was a few things. The run up into that name was quite high. The stock climbed 25% over 2 months heading into the print versus Nvidia that actually fell. And I was using, often they're compared because they're competing. The hype was around primarily Broadcom's building the chips for Google. A lot of strength there. The reason why you're seeing the sell off this morning has to do with a report that perhaps Google may be using MediaTek, another company, to build the next iteration of their Google TPUs, their tensor processing unit. So it's a very specific story. Broadcom hasn't confirmed this or anything, but that's adding to the sell-off specifically today that maybe Broadcom will not get all of Google's business for its next iteration, the V8 of the next iteration. Just think the version 8 of the latest custom chip for Google.
Okay, Christina, thank you. Speaking of selling off, Oracle's at the bottom of the list today as well on the S&P. Let's get to Seema Modi for more on the widening bond yields for Oracle and some of these other hyperscalers, which appears to be hurting the stock.
Yeah, and it's clear, Sarah, that the market is becoming just more aware of how these hyperscalers are spending money, especially when it comes to debt. As it pertains to Oracle, the key question is whether the company can raise mountains of new debt while holding on to its investment-grade credit rating, currently at BBB, the lowest of all the hyperscalers. Last week, Oracle's management did reiterate its commitment to IG status, but the yield on Oracle's tenure is telling a slightly different story, now widening to above 200 basis points, while its 5-year credit default swaps remain elevated on this belief that if the company raises a term loan from a consortium of banks, those banks will then have to buy Oracle CDS as a hedge. And the focus is starting to widen. Roth Capital Partners in its morning note today calling out the uptick in CoreWeave's CDS. Bank of America strategists separately write that hyperscalers like Meta, Amazon, Microsoft, Google, they generate enough cash flow to fund CapEx, but are also tapping the debt market to maintain flexibility, optimize the cost of capital. Of course, we've been watching that over the past couple of weeks. The key, though, they add, will be off-balance sheet structures and to look for mentions of vendor financing, which does involve the use of chips as collateral. We are watching the bonds of Meta. Spreads are widening slightly to 118 basis points versus 115 a month ago. I would point out that Microsoft bonds have tightened, the same with Amazon. So it is sort of evident of how investors are being more selective as we follow this debt story closely, guys.
The fact that Meta's credit default swaps are starting to increase is once again telling in terms of the level of hesitation the street has on these data center plays with the amount they're leasing out. Oracle right here, a little bounce from 180 to 183. Broadcom, are we at least at 347? Broadcom, 345. Broadcom getting zero love today. Once again, down another 4% here. Okay, so Broadcom's down. Oracle is still down right here. By the way, Nick Rayner arrested on homicide charge. Again, bails at $4.2 million. This one is not something where the street necessarily wants to, or where the LAPD wants to let him go. Mike in, thanks for the super chat. Great content. My thoughts on Micron earnings. I am bullish Micron. The problem is, unfortunately, I think Micron could have the same fate as Broadcom. Simply because of the fact that Micron's up 180% year to date. Now, I haven't gone deep into Micron's multiples, and I don't know if they're as aggressive as Broadcom. But yeah, dude, I mean, you've got to put up a perfect quarter if you're Micron. Like an absolute perfect quarter. And if you don't, like, is anyone going to be upset if Broadcom or Micron's up 140% year to date instead of 180? No. But that's 30% downside from here. So it's hard for me to play the earnings. Like just seeing that chart right there going into the end of December, it's hard to easily be like, yep, I'm going to play that and try to get some alpha. So yeah, that's my only fear on Micron. But again, I don't know their multiple. I mean, Micron's, PE's at 32, price to sales of 7. Broadcom PE is 72, price to sales of 25. Obviously, even after this decline, so there's a stark difference between the two. It's up 180% year to date. Okay, it's cheaper than SanDisk, that's fair, but SanDisk is also up like 300% this year, which is the problem. Pound right there, 186. GameStop up a little bit. And then Ethereum recovering a little bit above 3,000. Bitcoin at least above 87, bottomed at 86,650 so far. Back at 87 right here. All right, guys, I think that's it for today. I'll be back on the close and we'll see what we've got going on. But yeah, I mean, there's not a lot of headlines to explain the weakness we had this morning outside of the continuation yesterday or from Friday, which was this Oracle OpenAI stuff. And the potential exhaustion of this trade, along with the cops constantly being outside. Okay, I think that's it. I think that is it. Yeah, that's pretty much what we're seeing right here. We'll see tomorrow or today after the close what we get tomorrow again. When is the hood event? Do we know when the hood event is? I think is it during the after hours? December 16th. Oh shit, it's at 9 o'clock at night. Oh wow. Okay, so this will be late at night. All right, so we'll have Technical Tuesday and then we'll get into this hood event. So that'll be tomorrow. We'll see what the market thinks of this one and then we'll keep going from there. All right, word of the day. Word of the day is... Yeah, I'll link the meetup link again right here in the chat. I'll pin it so that people can see it, but I'll link it right here. Rehypothecation. Rehypothecation. Rehypothecation is the practice where a financial institution reuses collateral that a client has posted, often to back its own borrowing or trading activities. It increases liquidity and leverage in the system, but can amplify risk if multiple parties believe they have claims on the same collateral. During periods of market stress, excessive rehypothecation can expose hidden leverage and accelerate liquidity crunches. You know what this word reminds me of? It reminds me of the story of long-term capital management. Now, some of you guys might know about these guys. For those that don't, we'll talk about them again one day. These guys almost blew up the entire financial system back in, this was, I think, the 80s this happened. They ended up turning 3 billion of margin into 1.25 trillion because almost of the same concept of rehypothecation, of a lot of banks giving money to these guys to use and then using the collateral and then multiple banks claiming that it was their collateral when it wasn't. And it just blew up the entire, well, it almost blew. And then all the banks have to come in to save them after one of their trades went wrong. But for those that don't know the story of long-term capital management, it was a hedge fund that completely, I mean, quite literally could have disrupted the entire financial system based off one bad trade, which goes to show the financial markets are insane. 1998? Oh, yes, you're right, 1998. I watched a documentary on them a couple weeks ago. So we'll talk about them again. But yeah, that's what that word reminds me of. All right, that's the word of the day. Thank you, everybody, for being here. We'll be live on the close. We'll see what we've got going on, see what other headlines we have. Right now, market's red to slightly flat, and we'll see by the close if that changes. Tesla and NVIDIA leading today as they are both green. Thank you, everybody. Appreciate you all. We'll see you guys on the market close. Bye, everybody. Have a good one.